unveil its robotaxi on August 8th, so mark your calendars. Next up, Benchmark is cutting Spirit Aerosystems to a hold. The analyst cites uncertainty about Boeing's plan to buy the fuselage maker. Spirit, of course, makes airline parts for Boeing, Airbus, and Northrop Grumman, rather. And finally, we have Williams Trading cutting the price target on Nike to a street low, just $75. The analyst says that investors should, quote, sell the stock, and adds that the C-suite of the sportswear company doesn't have the, quote, instinct and experience that the prior team had. So certainly some cutting remarks there. Meanwhile, let's get a check on these markets. Just a couple minutes until that opening bell, you can see S&P 500 futures a little bit higher, 0.2%. We've been hanging out around these record highs. We haven't seen a lot of big moves up to the upside or to the downside, but still grinding higher and higher. You can see it's the same story if you take a look at the NASDAQ 100, your big tech benchmark, currently higher by about 0.3% as well. Small caps just can't get off the ground and they can't catch a bid. You can see that the Russell 2000, your small cap benchmark, currently lower by about 0.4%. It's certainly been a while since we saw a record high there. Meanwhile, you take a look at the Treasury market, your 10-year Treasury yield right now, it's a little bit higher, about 6 basis points. Some of that optimism coming out of that market. Coming up, Darden Restaurants getting a boost as profit overshadows Olive Garden's underwhelming sales. We'll discuss next. This is Bloomberg.
What's inside your ETF? Does the manager have institutional experience? Is the strategy built for all markets? With the Parametric Equity Premium Income ETF, you know what's inside. Inside, you'll find a novel income strategy designed for growth and tax efficiency from a leader in innovative solutions. Get to know what's inside PAPI, powered by Parametric, the symbol of alternative income.
Instead of AI here or there, why not put AI to work everywhere?
If you listen carefully, you'll hear a rhythm in the markets. The markets compose their own tunes, and once you learn to listen for them, you'll catch yourself humming along.
So absolutely, when you look at natural catastrophes, the number of events has significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the natural catastrophes.
How do you really assess the risk of climate change? Because how can you possibly know whether there's going to be a hurricane or a flood? It's just based on the past or the projection of the future? Or how do you do that?
Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more insurance, or not good because you got to pay a lot of claims?
It depends. I would say it's good because it creates the awareness to do more prevention. What we see today is that, as I said earlier, there is more events. It becomes more and more difficult to insure, and therefore we work a lot with our customers around prevention.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special Equality Series every Thursday in June at noon Eastern Time. Bloomberg Equality, celebrating inclusion this Pride Month.
This This is the countdown to the open. I'm Katie Greifeld. We are moments away from the start of trading. You take a look at the stock market right now. You have the S&P 500 mildly higher, just 0.2%, but it's green a little bit better if you take a look at big tech.
Nasdaq 100, 50 million to the sell side. Dow 30, 40 million to the sell side. Mag 7, 40 million to the sell side as well.
Action right now. You can see Euro USD, that pair just falling just a little bit. We're at 107 on that pair. You take a look at the Treasury market right now. You can see the 10-year yield currently higher by about 6 basis points or so. We're still well below where we were just a couple weeks ago. And meanwhile, you take a look at crude. It's up slightly, about 0.9%. Now, one stock to watch at the open, Nvidia, of course, the world's most valuable company, extending its lead even further over fellow mega cap tech names. For more, let's go to Bloomberg's Abigail Doolittle.
There are so many different ways that we could take this, but let's start off with this year's rally so far. 181%. We're not even halfway through in the year. That's the craze that we have around AI. But it's well deserved, because if we take a look at the numbers, Katie, relative to revenue growth for this year, we are expecting this company to grow by 208% on the top line. These are not small numbers either. Almost $80 billion in revenue. On the bottom line, closer to 700% growth for $1.72. Now, the expectations do slow down in 2026 to 34% on the top line and 33% on the bottom line, but we're nowhere near there. Now, relative to the rally out of the pandemic, up more than up almost 2,400%. And as we do have Nvidia as the world's most valuable company, something that really, really stands out to me, last January, this company wasn't even $500 billion worth of market cap. Now it's well north of $3 trillion, again, more than both Apple and Microsoft, a parabolic uptrend. When does this party stop? I would argue that at some point, these amazing blowout quarters that they put up, the big outlook guides, at some point when that slows down, we don't know when it is, that is when we could see some of that 90-degree angle physics, a parabolic uptrend simply doesn't hold,
over 5%, and Nvidia shares up 3.3% as well.
Will reverse at that point. But to use the words of Steve Sosnick over at Interactive Brokers, until the music stops, people are not taking a chair. But when that music stops, it could be an interesting hustle.
Well, Abigail, just really quickly, you're a technician. You mentioned that parabolic rise that we've seen in the share price. Can you even do technicals on a stock like Nvidia right now?
Yes, you absolutely can. And from other standpoint, if you take a look at the RSI on the stock relative to its move, first of all, it is almost 100% above the 200-day moving average. That is very extended, close to its highest level over the last 20 years. In the tech bubble, it went well above that 100% above the 200-day moving average, that extension. So it's a question of whether or not we are actually in that kind of a frothy environment, but again, deserved by this company for the growth. But the other thing that I would point out, Katie, is there are very subtle bearish divergences happening for this stock over all time periods, where the RSI is at a lower level of being overbought, which tells you that these new all-time highs, that the investor is buying it a little bit less confident than the last time. So all of this does support that at some point, that 90-degree angle to the upside, that parabolic uptrend will reverse. It's just really super hard to know when that might be.
Nvidia shares up 180% year to date. Abigail Doolittle, thank you so much. Meanwhile, moving on, Dell and Supermicro also rallying after Michael Dell said the company is building a Dell AI factory for Elon Musk's startup xAI. Bloomberg Technology co-host Ed Ludlow joins us now for more. Ed, give us the details.
Well, it directly relates to what Abby was just talking about in Nvidia, because an AI factory is just a new term that Dell's come up with for server racks, rows and rows of server racks in a server farm. And this is all played out over social media in the last 24 hours. As you said, Michael Dell posted on X that they're making AI factories for xAI to develop Grok. Supermicro was then thrown into the mix by Elon Musk himself, saying that they will also have a part of it. What I find so interesting about this is you can kind of do the math. We talked a lot, you and I, Kate, about how in the context of AI chips, it's not just something you can hold in your hand. It's not just a chip. It goes into a server rack that includes networking gear, storage, high bandwidth memory chips. But our colleagues at Bloomberg Intelligence have basically said, if Dell get just 50% of the xAI deal, and it's to develop Grok 3, the latest generation large language model from them, and you price each server rack at $1 million, it could could be a deal that is valued up to $3 billion for Dell, and therefore justify the consensus that the part of Dell's business where they make servers specifically for compute for AI has a 25% growth rate. And it's a part of the business that people were excited about, but we were left a bit disappointed following earnings. So look at what's happening. It's not just Dell and Supermicro rising this morning. HPE is up by association. And I would probably argue that a lot of the gain in Nvidia in this morning's session is because of that Dell announcement, so to speak, because it is the Nvidia GPUs that go into those server racks alongside all the other gizmos.
Well, Ed, I know you're going to be all over it on Bloomberg Technology. That is at 11 a.m. Eastern. Ed Ludlow, thank you so much. Meanwhile, shares of Trump media sliding after an SEC declaration that could dilute shareholders. Isabel Lee joins us now with more.
Hey, Katie, shares are now down around 6%. People are worried that this move would fatten the overall supply of shares, thereby lowering the process. So this move, which is long awaited, allows investors in the firm's derivatives, known as warrants, swap their holdings for shares in the company. So again, this could dilute long-time shareholders, which is why the stock is probably down. On late Tuesday, it was lower by 15%, and for the month, it was down around 36%. So if exercised, this warrants could add around $247 million to the company's balance sheets. And of course, historically, some investors who exercise the warrants sell their shares. So of course, this then creates selling pressures. But the company is a little bit more optimistic. They seem to be focusing more on the long term because we have the CEO saying that they will be well positioned to pursue TV streaming and other enhancements and even potential M&A. Warrants are also known as sweeteners and are common in the SPAC world because they're designed to reward investors. And of course, this is the Trump Media and Technology Group. So Donald Trump is the firm's biggest shareholders with around 115 million shares worth around $3 billion. Shares are now slightly lower by 8%, so the stock is continuing its slide, Katie.
All right, yeah, definitely falling out of bed there. Down 8% at the moment. Isabel Lee, thank you so much. And we turn over to earnings because we have a fresh report out this morning from grocery chain Kroger. And for more, I'm pleased to say we're joined now by Bloomberg's Natalia Konijevich.
Hi, Katie. Yeah, so it was a strong beat across the board. EPS came at $1.42 per share. Analysts had expected $1.35 per share. Comparable sales rose 0.5%, and that was also higher than analysts had expected. The company maintained its guidance for revenue and earnings, and for Bloomberg Intelligence, this is a very encouraging signal. The main takeaway from many analysts I spoke with, they say this is a signal that the company's investment strategy is paying off. Well, first of all, Kroger invests heavily in its fresh department. This is one of the biggest drivers for sales. It also invests in prices, basically by reducing prices, offering promotions. And in today's report, Kroger said that total households and consumer visits increased during the quarter due to personalized discounts and improved store execution. However, on the flip side, we see that the margin is deteriorating a little bit, and this has to do with lowering prices. But overall, analysts are quite optimistic about the stock. The company got a few upgrades in the past few days. However, analysts, of course, keep
Treasury
an eye
yields
on
hit session highs across the board as the S&P 500 hits a record high. 10-year yield last up 7 basis points at
4.288%. Spending, Natalia Konijevich, thank you so much. Let's stay in the food space because shares of Darden Restaurants rising despite Olive Garden's same-store sales falling for the second consecutive quarter. Joining us now is Michael Halen. He is restaurant analyst for Bloomberg Intelligence. And this is an interesting one because actually you take a look at the outlook and it was a little bit disappointing. And typically that would be a sell sign, Michael.
Yeah, but historically Darden is pretty good at issuing guidance and beating it. They're good at playing the, playing that Wall Street game. All in all, it was a solid report. They topped industry same-store sales in the quarter. Their margins, continue to be best in class. Investors love Darden. It's a very well-run company. Operations are great, and they have some advantages in this consumer slowdown, namely scale. They can continue to price below inflation, which they've been doing for years, and that's kind of eased some of the traffic decline. And and they have great tenure for their employees, right? And so the experience is usually good in the restaurant.
So a story of under-promise, over-deliver. You have to get better at that one. Let's talk about the portfolio here, because we talk about Olive Garden all the time. Of course, it's the parent company of Olive Garden. You take a look at comp sales for that specific brand. They were disappointing. Longhorn, though, definitely beating expectations on that metric.
Yeah, consumers seem to be frequenting these steakhouses. They seem to have done better. They seem to do better when there's beef inflation, right? I guess there's a few things going on. Part of it is Longhorn's raising prices more than Olive Garden is, right? And so that's part of the reason why the same-store sales are higher. But also, when we see beef deflation historically, we see steakhouses outperform. So I think people are looking at the price in the grocery store versus the price they get at Longhorn. Also, they don't have a 1,000-degree oven in their house, and so Longhorn can cook a steak better maybe than they can. And I think for those reasons, we see steak chains do pretty well during recessions, during times of inflation, and it's not just them, but Longhorn's done a good job.
Yeah, and you've definitely seen that in these results. Talk to me more about the pricing strategy. You mentioned, of course, they can adjust pricing here. It sounds like they have some history of doing that. When it comes to that specific lever, though, how eager are they to do that? How quick would they be to respond?
Yeah, they're not very eager at all. For the last 4 years, they've underpriced inflation pretty significantly, and it's a smart long-term strategy. Management talked about it on the call. It's like when you get into that, cycle of pricing over the long term, people are going to really cut back more on their visits, and so people can view a place like Olive Garden. They can view Longhorn as places that can continue to provide value in this inflationary environment. And, as I mentioned earlier, their scale really helps them do that.
And before I let you go, just quickly, you are fresh off the earnings call. What was the big topic of discussion on that one?
Yeah, I think some of the key points were, they talked about the consumer and how the consumer continues to be weak, especially consumers and households earning less than $75,000 a year, in particular, $50,000 a year or less. They continued to talk about their strategy of pricing less than inflation. They're expecting about 3% inflation this year, and their pricing strategy is is for 2.5% to 3%. I'd say those are the two main takeaways. All in all, it's more of the same, which investors should like, right? You don't want any surprises. You want management to continue, on the path that they're on, as long as it's successful, which Darden clearly has been.
Well, Michael, great to speak with you. Appreciate your time. Our thanks to Michael Halen of Bloomberg Intelligence. Now, coming up, we have Frank Moncomb. He is Senior Portfolio Manager over at Antimo, why he believes election risk isn't properly priced into the market. This is Bloomberg.
Instead of AI here or there, why not put AI to work everywhere?
The world needs ways to reduce carbon emissions,
especially for heavy industry.
We're working on solutions in our own operations,
like carbon capture
and clean energy from hydrogen.
So who are we?
Believe it or not, ExxonMobil. And these solutions can help businesses like yours.
Or yours.
Or yours. Heavy industry with low emissions. Let's deliver.
What's inside your ETF? Is the manager a jack of all trades? Is it run by an algorithm? With the Eaton Vance High Yield ETF, you know what's inside. Inside, you'll find thoughtful bond selection from fixed income specialists with bona fide active management credentials. Get to know what's inside EVHY, now available from Eaton Vance, the symbol of high yield done right.
Learned along the way.
This show is called The Deal?
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
You
Huge deal.
Who dug this up? What are y'all's in trouble?
The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything. The top names in business are on Bloomberg.
The valuation environment has fundamentally changed. Private equity sponsors are just going to have to hold companies longer, are going to need to take on equity to get some refinancings done, and returns are going to be lower over the next few years.
If you go back all the way to 2007, we used to have a high interest rate environment. We used to have high prices, and if you look at those vintages, even the GFC vintages have done actually pretty well in the end.
Bloomberg. Context changes everything.
Joining us now, we have Frank Moncomb. He is Senior Portfolio Manager over at Antimo. It's great to see you in person.
Pleasure to be here, Katie.
Let's talk about tech. We were having this conversation with Samir Samana just about 30 minutes ago or so, and he made the point that he doesn't think that what we're seeing when it comes to the fundamentals of some of these tech names actually justify the valuation. So what's your view? Can we call this a bubble?
I think trying to have a discussion around whether it's a bubble or not, it's not really the right discussion to be having. I think we're clearly at the foothills of a bubble at the minimum. The question is it a big bubble, small bubble, medium-sized bubble? We had to look at, where the market is today in terms of positioning, momentum, RSI. Everything looks very, very overstretched. The problem is with bubbles is, people think that bubbles are, some kind of cataclysmic event happening in the market. It's not, right? It's a feature, not a bug of markets, right? So the way you got to look at it is say, am I in a bubble, yes or not? And when you answer the question yes, is to have a game plan to be able to trade around bubble markets. And I think we are in a bubble. And the way to trade around it is to look for downside protection. And the problem, the issue with this market is people are failing to realize how cheap volatility and skew is. So it provides an opportunity to really, protect yourself to the downside at a very, very cheap cost. So I think the question as to whether we're in a bubble or not is not really a question that we should be posing ourselves. It's more so how do we trade around the bubble market.
Well, let's talk about that downside protection, because you take a look at the VIX, for example, it's been doing nothing for quite a long time, currently trading with below a 13 handle, and it just seems like nothing seems to shake this market. So when you talk about downside protection, over what timeline are you considering?
That's actually a very good point. I think that the way to trade around bubble markets, the playbook for that is not to try and short the market directionally. It's to look to play non-linearly via options. And, put strategies are very efficient, especially here, where, like I said, where vol and skew is really cheap. So what you want to do is basically ladder out your risk as you put in all this, put spread structures over time so that you're kind of minimizing your theta decay. And when you think about the VIX today, one thing that kind of should be garnering investors kind of, the investors kind of respect here in this market is the fact that you have to look at what's going on with volatility in Europe, right? The V2X and the VIX are currently diverging pretty materially. And this type of divergence really doesn't last too long. So what I mean by that is, in addition to the fact that the market is really straight to the upside, I think as we start to trade into Q3, the market probably is going to be rotating away from this momentum theme into what's going on with geopolitics and politics around the election cycle. I mean, we've got the U.S. here, the debate next week on June 27th. We've got the snap election in France on July 4th, and the UK election on July 4th, rather, and the France election on July 7th. That's an opportunity, really, for investors to really try to start to hedge the downside here as we flip into, the election cycle in the next quarter.
Well, let's stay stateside because, like you mentioned, the first debate is in 7 days' time. And then, of course, November, we have the real deal. And when you think about election volatility, there's not much priced right now. But should there be? Because you consider a Trump versus a Biden presidency. We know both of those candidates in both of those administrations.
Yeah, we do. And one thing we do know about either
At 10
candidate
a.m.
is that
Eastern time, we get
going to
Eurozone
be,
consumer confidence flash prior
fiscally,
-14,
it's going to be
spot
fiscal
3.
profligacy. We know that profligacy. Whether it's Trump or Biden in there. On the Trump side, you've got tariffs. You've got a crackdown on immigration. On the Biden side, you've got the inflation reduction act that's still inflationary. So I mean, I think it makes it easier for investors actually because you don't have to try to figure out which candidate is going to get in there to get a clearer picture of what the inflation outlook is going to look like. Regardless of who gets in there, inflation is going to be a problem, and the fiscal path of this country is not going to change regardless of who gets in the White House. So again, there's so many signs to point to the fact that this time is ripe for investors to really look at some cheap downside protection.
And I have just about a minute left. So that cheap downside protection, when you think about the upcoming election, I was going to ask you, what's the best way to protect for that? Is that through the volatility market or is it through something like commodities, for example?
Well, that's actually a very good point. Commodities also provide a tremendous amount of hedging around inflation risk, right? But the thing with commodities nowadays is you have to be able to think about what your inflation hedging framework looks like. So if you're looking at a hedge from an inflation that's coming from a cost push perspective, then you want to think about things like energy and ag. If you have an inflation that's more of a demand pool, then you have to think about things like copper and alley. Right? But if you have inflation that's more about central banks continue to be, staying in easing mode and kind of losing their credibility, then you got to think about things like gold, right? And I think commodities provide a huge amount of, downside protection when it comes to inflation. And the thing is, with commodities at the time, at where we are in the market today at this juncture, is you have to be really selective on which commodity you actually allocate to. So it's not just a beta allocation to commodities. It's basically trying to pick and choose which commodities make sense here, where you are in the cycle, and where you are the supply-demand picture, right? And we've seen what's happening recently with copper and gold and oil, where positioning really has driven a lot of moves that we've seen in these markets. So there's a lot of technicals also that are at play, and that's offering some kind of relative value opportunities that comes from mispricings between these different types of commodities. So I think investors, in addition to saying, hey, we want to be allocated to commodities, I think we should get our hands dirty a little bit more and try to figure out which commodities make sense at which time frame here as we head into the second half of the year.
Well, we'll have to pick up this conversation again soon. Frank, great to see you in person. Our thanks, of course, to Frank Monkem of Antimo. And for some of the sector price action this morning, let's get back to Bloomberg's Abigail Doolittle.
We're looking at a modest gain for the S&P 500 right now. Katie, up about 0.3%, up for a third day in a row, heading to another record close, carving out an all-time high. Currently, the top sector on the day is energy, up about 1%. Speaking of commodities, we do, of course, have oil up about the same amount, so helping out there. Utilities, interestingly, higher, even with yields higher. Those dividends should look less attractive relative to high yields, but the narrative, of course, this year is that it's an AI play, so anything AI is higher. Real estate and healthcare both down. Those are, well, at least healthcare, defensive sector, so the fact that it's down, that is almost a risk on signal, but small moves. As for one sector that's making a bigger move over the last few days, that is the home building sector, currently higher today, but over the last 2 days, down 1.9%. And Lennar, a couple of days ago, of course, put out results that were not received well by Wall Street, but KB Home today, that stock up nearly 5% as they maintain margins despite incentives to sell their homes.
All right, Abigail, thank you so much. Coming up on this program, the market-moving events you need to be watching. That's next in our trading diary. This is Bloomberg.
What's inside your ETF? Does the manager have institutional experience? Is the strategy built for all markets? With the Parametric Equity Premium Income ETF, you know what's inside. Inside, you'll find a novel income strategy designed for growth and tax efficiency from a leader in innovative solutions. Get to know what's inside PAPI, powered by Parametric, the symbol of alternative income.
At 10 Eastern Time, we get Eurozone Consumer Confidence Flash. Prior, -14, spot 3.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
All right, it's time now for the Trading Diary, what you need to be watching today and the rest of the week. We get oil inventories later on this afternoon, plus Fed Speak with Fed heads from Barkin and Daly later on today. We round out the week tomorrow with earnings from CarMax and, of course, existing home sales, because already Friday coming up tomorrow. Meanwhile, this was the Countdown to the Open. I'm Katie Greifeld, and this is Bloomberg.
Can AI transform the way your people work now?
The world needs ways to reduce carbon emissions,
especially for heavy industry.
We're working on solutions in our own operations,
like carbon capture and clean energy from hydrogen.
So who are we?
Believe it or not, ExxonMobil. And these solutions can help businesses like yours.
Or yours.
Or yours.
Heavy industry with low emissions. Let's deliver.
AI can help your customer service people resolve issues faster so their customers are even happier.
Another thank you for you.
Thanks.
Those macaroons?
Don't even think about it.
Nope, I'm not thinking about it.
Is there anything else I can help you with today?
What's inside your ETF? Does the manager have institutional experience? Is the strategy built for all markets? With the Parametric Equity Premium Income ETF, you know what's inside. Inside, you'll find a novel income strategy designed for growth and tax efficiency from a leader in innovative solutions. Get to know what's inside PAPI, powered by Parametric, the symbol of alternative income.
It's a quiet day for me in terms of work, and I start typically by playing tennis with my wife. We go for a swim all year round. After that, have a nice lunch, and then I'm on to a good trajectory for the weekend. And then Sunday, I try to prepare for the coming weeks. But through a weekend, I would send either no emails or very few emails, because I want to drive a culture where all get an opportunity to spend the weekend as they fancy. I think what we do is so difficult, and it takes so much creative thinking to succeed, that if you're always on, always busy, the bandwidth of your reflection is just too narrow.
1 minute remaining.
And I generally believe that Monday mornings I'm a better leader than I am, say, Friday afternoon. I also take all my vacations. I generally believe I'm a much better CEO right after a vacation than I am before vacation.
is Bloomberg.
10 seconds.
All right, we are 30 minutes into the U.S. trading day on this Thursday, June 20th. Here are the top stories we're following. Stocks poised for new highs, driven by tech gains and optimism about rate cuts after the Swiss National Bank trimmed rates for the second time this year. A taste of M&A, Tate Lyle buying the specialty ingredient company CP Kelco for nearly $2 billion. We'll set the table with Tate Lyle CEO Nick Hampton. And a global
minus
EV
14,
alliance,
minus 14.
LG Electronics
Lower
and
than forecast,
ChargePoint
minus
are
13,
teaming up to
spot
install
8.
new EV charging stations in the U.S. We'll discuss with the ChargePoint SVP of the Americas in just a bit. I'm Katie Greifeld in New York. Welcome to Bloomberg Markets. You take a look at markets at this moment, and there is green on the screen behind me. You can see the S&P 500. We're at another all-time high, currently up about 0.3%, actually outperforming big tech with the NASDAQ 100, currently up by about 0.2%. I can't say the same for small caps, of course, also down. And then you take a look at the 2-year Treasury yield, also higher, about 3 basis points or so, still below 5%, though. Let's get to the earnings picture, though, because it's a mixed bag for Darden Restaurants reporting this morning. The company delivering a beat on earnings. However, Olive Garden's same-store sales fell for the second consecutive quarter. Joining us now is Michael Halen. He is restaurant analyst for Bloomberg Intelligence. And Michael, seems like this was better than feared overall.
Yeah, for sure. Casual dining same-store sales have been weak all year. So I think that's a big part of it. It was kind of a relief that they were still able to beat on the bottom line, even though the top line is being pressured by, weak low-income consumer spending.
Yeah, I was going to ask, is there anything we can sort of extrapolate out to the broader economy and the state of the consumer here? For example, in retail, we talk about all the time the trade down that we're seeing. Are we seeing a similar sort of dynamic play out when it comes to the restaurant industry?
Yeah, and restaurant sales have been weakening for a year now, right? So typically, as usual, restaurants are a canary in the coal mine. Their sales tend to fall off before other sectors. In a slowdown. So, and this year has been especially tough. Consumers are dealing with 4 years of inflation and price hikes at restaurants, and they're dealing with these higher prices by racking up credit card debt, and credit card delinquencies and auto loan delinquencies are rising. So low-income consumers are definitely under pressure. They don't see the same value at a restaurant visit, and so they're trading down to the grocery store and probably making some more meals at home right now.
All right, Michael Halen, really appreciate your perspective. Of course, Michael Halen of Bloomberg Intelligence. And we do want to bring you some breaking news. This is coming from the Supreme Court. The Supreme Court upholding the 2017 U.S. tax on foreign business income. Of course, we're expecting several Supreme Court decisions, and there's one of the first ones, again, that we're getting today, that the Supreme Court is upholding the 2017 U.S. tax on foreign business income. We're going to bring you more details as we get them. But let's turn now to the broader markets, because joining us now we have Dana Diorio. She is Evestnet Co-Chief Investment Officer and Group President. Dana, it's great to have you with me. I'm going to start with a stat from a Bloomberg News story this morning, and that's that roughly a third of S&P 500 companies have hit a one-month low in the past month. And we talk about breadth all the time and how it just isn't there. Is that something to be concerned about, or is that just the state of the market right now?
I do think it is something to be concerned about. And, certainly I will say my discipline in terms of investments and approach to investments has really always been around fundamentals, value for value, right? Valuations matter. Over time, things like quality matter, right? And we're just, and it's not to say that the top of the market, the Nvidias, the AI, the big tech is is not coming forth with the earnings to support, because they are, right? The earnings are there to support, the growth that you see there. But to see the lack of breadth, to look at what the equal weighted S&P is doing versus, the market cap weighted, I think it obscures a lot for the average investor, because they're in the market or they're in some actively managed portfolio that it has low tracking error to market probably on a relative basis. It's not a ton of idiosyncratic risk. So for them, it looks like the market's doing great, but in fact, a lot of the economy is not really participating.
So let's talk about that, the divergence that you're seeing between the S&P 500, of course, your large caps, and then you have the equal weight, and then you have your small caps, which just can't get off the ground. What's the catalyst? How do those lines come back together? What is it actually going to take, Dana?
Well, the first thing you think of is, of course, interest rates, right? Small caps tend to be much more interest rate sensitive. They need to go back to capital markets for, credit more, and therefore the dependency on what that rate is and, what the corporate finance team there is looking at in terms of rolling over debt and how much higher that cost is going to be. So, one of the clear drivers, obviously, is do we get rate cuts? It's interesting because you see the market sort of tepidly assuming maybe we do get a little bit more. Maybe it's 2 this year, 1 possibly before the election, 1 after. But it isn't at the moment acting as the catalyst for small caps that you would hope it would be. I think to the extent that we get really kind of solid evidence that the Fed is willing and ready to start making some cuts, I think that is what will help small caps.
But it's so interesting because we're 3 months or so away from the first rate cut, and we're just not seeing, like you say, that really catalyst come into place for small caps. And you think about the potential timeline here for when we might actually see the rally broaden out. Apparently, 3 months ahead of the first rate cut isn't the time to do it. So when is?
Yeah, a part of what you have to think about with all of this, too, is the market in general, so we're looking at small caps as sort of lagging, and, the equal weight, which obviously overweights relative to market cap weight, is going to have a lot more small cap bias, low price bias. And we're sort of looking at that like, oh, geez, they're lagging. And really, it's probably more the inverse, right? We're seeing massive outperformance amongst growth, tech, AI-driven outperformance that really, when the rest of the economy, when you look at, well, how will that growth story, if that's what's propelling the market cap weighted via these names, how does that trickle down to these other companies? And I don't think there's a clear storyline there yet. There's certainly going to be winners and losers, but without that storyline, the question becomes, to your point, well, what is the catalyst, and what type of a market are we actually going into if we think about things just from a broad perspective? Well, we see retail sales are down. We see consumers are worried, the bite of inflation, right? Yes, great to have a moderating inflation report, but at the end of the day, prices are significantly higher than they were just a few years ago, and that's not going away, right? And so, and then, unemployment, there's no way to argue that unemployment hasn't stayed very muted and a very strong picture for the Fed. But without the thought that the Fed, and there's an argument to be made that the Fed's even a little bit behind on some of these rate cuts, without the thought that the Fed is going to 100% start cutting rates, it becomes a question of, well, why would I expect then, an increase in some of these other stocks when I don't see the story there, right? I don't have the thesis for that.
Well, let's talk about the dominant storyline in the market, and that, of course, is AI. We opened up with a conversation about tech and, what we're seeing when it comes to some of these big chip makers. But how far can you follow that AI storyline? I hear more and more about utilities, data centers, even copper, for example. I mean, how far does it go, Dana?
Yeah, so it's interesting because obviously copper has been experiencing a boom this year, and, we're going to have this, right? We're going to have this storyline, a narrative around, hey, everything is AI. It's because you need copper for AI, right? And you need energy for AI. And so therefore, the energy companies should get a boost. And, as these things do, right? Any aspect of the supply chain that you can somehow attach to that AI story potentially gets a boost from this. So I would say this is the time for really kind of a fundamental look at these different theses, right? And to say, okay, well, what companies actually do stand to benefit from this, and what companies are kind of being lifted up in this, hey, all boats that have anything to do with AI can float higher. And so as an investor, I think you have to be careful. I think there are ways to play AI. Think internationally. Think some of these semiconductors, the story is there, but they're not really pricing into something to the extent of, say, an Nvidia, right? So there's definitely opportunity and ways to play this, I think, but you also have to be buyer beware that you're not getting caught up in a storyline that, maybe it's related or maybe copper's up because of supply chains,
Right. Yeah, no, it's a good point, too, that the opportunities are out there, but of course you have to be selective. It's very difficult to pick winners. Dana, have to keep the conversation going at some point later. Dana Diorio of InvestNet, thank you so much. Let's take a look at what's moving now underneath these markets with Bloomberg's Emily Grafeo, and we were just talking about AI, so tell me about the poster child.
Nvidia. There's no denying that this is essentially the stock that all investors are going to play this year, and essentially last year's too, AI frenzy. It's up about 3% right now. Not sure if there's any exact fundamental news on this day, but the big news this week is that it's now the world's most valuable company. Over $3 trillion, more than $2 trillion of that value has been added this year. And what's remarkable, Katie, is that that's bigger than the total market cap of Amazon, the total market cap of Meta. If you go back to its IPO in 1999, it's now posted a total return of, I don't even know if I can say this number correctly.
I think it's like 6 digits, right?
Yes, 591. 78%. I'm not good with these larger.
That's a lot. That's
but
a lot.
It is a 6-digit gain, including reinvested dividends, and over 170% year to date. This year, it is just a remarkable ride for this company.
An incredible momentum chase going on as well, with another 3% or so added to Nvidia shares today. But keeping the conversation going on AI, Accenture, I mean, it's the same sort of story here.
It is, yeah. And when you actually look at their earnings, it wasn't all good on the top line, at least. You look at adjusted EPS and revenue, that was a slight miss, but investors didn't seem to mind this morning, because when you dig in, Accenture posted a beat on their new bookings for the third quarter. Generative AI new bookings totaled $900 million versus about $600 million in the second quarter. Bookings overall were up 23% since last year and also beat estimates. We're seeing that stock up about 10%. And you look at what analysts are saying, the report is better than feared. Vital Knowledge said that while the income statement wasn't terrific, the very robust bookings number, pointing out the generative AI bookings, should help the stock trade well. It's an AI morning, Katie, because my next stock is also about AI.
Tell me all about Dell.
Okay, so we have that stock up higher, and this is about a partnership with Elon Musk's XAI startup. This morning, in a post on X, Musk said that Dell and also Super Microcomputer, which is another stock that is going crazy this year, they're going to be providing server racks for the supercomputer that his AI startup is building. And then this followed a post by Michael Dell that said Dell is building an AI factory with Nvidia to power the supercomputer. There was a picture of all of these processors.
Very exciting.
That he posted. But this is really this is a broader story of these hardware companies, these server companies, increasing their output as more, I guess, customers want to build AI. They need these servers to have a higher data processing capacity, basically to just handle the computer processing that needs to power AI.
Yeah, can't wait to get more details on that one. But in any case, the shares are higher this morning. Bloomberg's Emily Grafeo, thank you so much. Now, coming up, a sweet deal in the food biz. The UK-based sweetener maker Tate Lyle announcing that it will buy U.S. competitor CP Kelco for $1.8 billion. Nick Hampton, he is Tate Lyle's CEO. He joins us next to break down the deal. This is Bloomberg.
Instead of AI here or there, why not put AI to work everywhere?
building a home for the people who are worth it. Stepping out, throwing in a line, and dropping the tailgate for a picnic. And finding far-off campsites with the people you're closest to. Upgrade your truck, Jeep, or Bronco with over 1 million parts and accessories. And bring your truck to life. Real truck.
What's inside your ETF? Does the manager have institutional experience? Is the strategy built for all markets? With the Parametric Equity Premium Income ETF, you know what's inside. Inside, you'll find a novel income strategy designed for growth and tax efficiency from a leader in innovative solutions. Get to know what's inside PAPI, powered by Parametric.
So the
the
IMF
symbol
sees
of
the
alternative
ECB lowering
income.
the key rate to 2.5% in the third quarter of 2025.
I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
Protect your trade from macro headline risk with financial futures brokers. Now only $99 a year for our real-time service.
Well, UK-based sweetener maker Tate Lyle announcing today it will buy specialty ingredient maker CP Kelco for nearly $2 billion. Joining us now, I'm pleased to say we have Nick Hampton. He is Tate Lyle's CEO. And to catch our audience up to speed, of course, Tate Lyle, you help food and drink manufacturers really remove sugar and fat from their products, replace them with alternatives that replicate the taste and feel. So how does this deal aid you in that core competency?
Casey, thank you. This is the perfect fit for us and for CP Kelco because they bring really, really strong capability in creating texture and mouthfeel in food and beverage products. And as you think about the move towards healthier and tastier food, it's critical not just to replace the sugar in terms of its sweetness, but also all of the texture that makes the consumer experience as good as it can be. So think about replacing the fat and sugar in a yogurt, and you need to create that creamy taste. Well, the combination with CP Kelco can help us with that. And as we think about the future of our business, being the best at what we do in terms of being able to help customers reformulate for health and for clean label and for nutrition is really important. So bringing the two companies together really adds to our capability to do that and makes us more customer relevant and will therefore enable us to grow together.
Let's talk about some of these sell-side reaction. Of course, you have Barclays out saying that this deal looks like a good fit when it comes to scope and size, a reasonable valuation multiple. But you take a look at CP Kelco, and there has been some recent volume decline and also margin pressure. How do you reassure investors about what we're seeing on the CP Kelco side of things?
So look, I mean, the CP Kelco is a fantastic business. Let's start with that. They've suffered in the near term from some of the market softness that we've seen, both driven by destocking and driven by consumer softness because of all the inflationary pressures. So all of those things have led to some temporary volume and margin decline. But we've got a very clear pathway to drive growth together going forward. We've worked very closely in partnership with them to build a joint plan for how we're going to do that. And, that starts when the transaction closes. The other thing I'd say is they're seeing some improvement in performance this year. We're seeing stabilization of volumes and revenue and margins. So that recovery is already starting.
And let's talk a little bit more about the structure of this deal, because that has raised some questions as well, because CP Kelco's parent company, that is JM Huber, as part of this deal, they're going to become a long-term investor, have a stake of about 16% or so. Can we get more details on the conditions of their ownership? For example, can they buy more shares, or are there any restrictions on sales, for example?
So I say two things that are really important. Their continued participation in the business is a clear belief in the potential of the partnership together to drive growth. It's a real validation of why the two companies together can grow and succeed. that's reflected in their continued equity participation because they want to participate in the long-term success of both businesses. There are customary lock-up periods and sell-down conditions, as you would expect in a transaction like this. So there's a lock-in period for 2 years, but actually they're committed to the longer term here. So we're very excited about partnering with them and in their faith in us in taking control of a significant part of their business.
All right, appreciate that. And you've also said that this deal, it's going to generate cost synergies of about $50 million by the end of the second financial year after it actually completes, which I believe is expected in the fourth quarter. Can you tell us a little bit more about where the opportunities for cost cutting actually are, where those synergies are going to come from?
So we've worked very closely with the management team at CP Kelco to lay out a pathway for this. And it really comes from three areas. The first is the benefits of scale when it comes to things like procurement, and the benefits of being able actually to source together. The second area is in the scale efficiencies we can create in things like back office. You know, we've got a shared service center and we can really benefit from putting the two businesses together. And then thirdly, there's a big commercial overlap between the two businesses. So, you know, we've both got structures that will allow us to become stronger together and become more efficient as we grow. So it's a real benefit from the two companies coming together in a complementary way.
And Nick, you say overlap and I think layoffs. So when you think about headcount, for example, are you expecting reductions there?
Because always as you put two businesses together, you're looking for efficiencies everywhere. And, you know, we've been through a number of these kind of experiences over the last few years. The key is that we get the best people in the best jobs and we take care of everybody through that process. But of course, we're going to become more efficient as we come together.
And I do want to talk a little bit about the M&A environment right now. You and I were talking in the break that you haven't seen a lot of M&A, both stateside and over where you are as well. And when you think about why now for this deal, I mean, what was the decision tree there?
I mean, it's really a combination of factors. The first is, as a business, we've completed our transformation to focus on specialty food ingredients and the future of food, and therefore the time for us is right. As we looked at the industry structure and talked to each other, we also believe that being more relevant for customers by bringing our combined portfolio together will allow us to grow faster together. So it's a choice on both sides that this is the right time. And the great thing is it's come together in a way where we've done, if you like, a bilateral agreement that both companies are very happy with at a time that suits both of us.
Well, Nick, really appreciate your time on what I know is a very busy day. Our thanks, of course, to Nick Hampton, the CEO of Tate Lyle. Now, still ahead on this program, we're going to take a look at the companies making the most social buzz today in our Social Climber segment. Up next, this is Bloomberg.
Can AI transform the way your people work now?
The world needs ways to reduce carbon emissions,
especially for heavy industry.
We're working on solutions in our own operations.
Like carbon capture and clean energy from hydrogen.
So who are we?
Believe it or not, ExxonMobil. And these solutions can help businesses like yours.
Or yours.
Or yours.
Heavy industry with low emissions. Let's deliver.
What's inside your ETF? Does the manager have institutional experience? Is the strategy built for all markets? With the Parametric Equity Premium Income ETF, you know what's inside. Inside, you'll find a novel income strategy designed for growth and tax efficiency from a leader in innovative solutions. Get to know what's inside PAPI, powered by Parametric, the symbol of alternative income.
Building a home for the people who are worth it. Stepping out, throwing in a line, and dropping the tailgate for a picnic. And finding far-off campsites with the people you're closest to. Upgrade your truck, Jeep, or Bronco with over 1 million parts and accessories. And bring your truck to life. Real truck.
Think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything.
All right, it's time now for Social Climbers. Look at the stocks making waves on social media this morning. And first up, McDonald's is going to the mat, escalating a bitter price war in the fast food biz. The burger giant is kicking off a marketing blitz with a new $5 meal deal that will include a McDouble cheeseburger or a McChicken sandwich, small French fries, 4-piece chicken nuggets, and a small soft drink. Eat your heart out. Next up, Amazon shoppers can expect less plastic in their packages. The e-commerce giant announcing today it's replacing its plastic air pillows with recycled paper. The company also said it will eventually replace the hard-to-recycle white and blue plastic mailers with paper sleeves. And finally, the black market for weight loss drugs is thriving, and Eli Lilly is sounding the alarm. The pharma giant is warning about the dangers of fake and compounded versions of its diabetes and weight loss medications. Eli Lilly is announcing new lawsuits against wellness centers and medical spas that advertise their drugs. Eli Lilly also says it never sells medications on social media. And you can follow all the latest company buzz on TREN Go on your Bloomberg terminal. Spelling is hard, so let's look at the markets right now. The S&P 500, it's still green, but just so. You can see it's up about 0.1%. We were higher by about 0.3% earlier, but giving up some of those gains. Meanwhile, you take a look at big tech, and we flipped into negative territory. The NASDAQ 100 currently off by about 0.1%, all as yields continue to climb higher. That 2-year Treasury yield currently higher by about 3 basis points. Now coming up, EV charging wherever you roam. ChargePoint and LG partnering to make that a reality. Rich Moore, he is ChargePoint SVP Americas. He joins us next. This is Bloomberg.
Can AI transform the way your people work now?
What's inside your ETF? Does the manager have institutional experience? Is the strategy built for all markets? With the Parametric Equity Premium Income ETF, you know what's inside. Inside, you'll find a novel income strategy designed for growth and tax efficiency from a leader in innovative solutions. Get to know what's inside PAPI, powered by Parametric, the symbol of alternative income.
If you listen carefully, you'll hear a rhythm in the markets. The markets compose their own tunes, and once you learn to listen for them, you'll catch yourself humming along.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals.
US Treasury Secretary Yellen says, I believe the new tariffs on Chinese
Mark
goods
Maurer
are highly
joined On as
strategic.
Chief Operating Officer in March 2013. Martin Hoffman arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths.
Do you want to stay up to
and
date
if you
with the
take us
latest
together,
and
you
be on
just
the
get
leading edge
more.
of news for non-farm payrolls?
Companies
Then
with
sign up today and
co-CEOs
get our
are
special
rare,
offer
but
of
On's
Financial
configuration
News
is
Pro
even
for a year's
more
worth of our
unusual.
service for
Martin
the price
Hoffman
of
also
$1.
holds the
That's up
CFO
32%.
position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at noon Eastern Time. Bloomberg Equality, celebrating inclusion this Pride Month.
And Treasury Secretary Yellen says we are refusing to let U.S. new energy products companies be put out of business by coordinated dumping from China.
ChargePoint and LG announcing a new partnership this week. The two companies are aiming to make EV chargers more accessible to consumers. And here with more on the deal is Bloomberg's Abigail Doolittle.
Well, Katie, the stock is responding positively, up about 1% the last time that I looked. And to your point, yes, there is this announcement that LG Electronics has partnered with ChargePoint to expand its EV charging network in the U.S. The initial result of this partnership will introduce commercial charging solutions that combine ChargePoint's charger management software with LG's advanced EV charging hardware. Deliveries are expected to happen later this year. And you can see here that we also have on ChargePoint teaming up with Airbnb to add residential charging to listings and collaborating with Porsche North America on service integration. So this EV charging company, really lots going on for it. Let's take a look at this stock along with some of its competitors.
Trump tariffs will be across the board and affect all trade partners and raise costs.
Declines, some serious declines. ChargePoint down 35%. EV Go down more, down 43%. Blink down about 19%. And then Bloom Energy, an indirect play, down about 7%. I would argue, though, one point on ChargePoint, the reason we have this decline is there's a pretty significant short interest. So not everybody's buying in on the idea that there's going to be success here in terms of these announcements. In blue, we're looking at the stock price. In white, we're looking at the short interest. The short interest is currently 28%. So that's really pressing on these shares, I would argue. But if they continue to do announcements and perform, you could really see this flip. I would remind everybody of Tesla back in the day, an even higher short interest, and clearly overcame that.
Yeah, Abigail Doolittle, thanks for that context. Of course, we all remember the days of those Tesla shorts, but let's focus on this, of course, partnership. We're going to do that with Rich Moore. He is ChargePoint SVP Americas. And ChargePoint, of course, it manages more than 306,000 EV charging ports across the U.S. and Europe. And Rich, it's great to have you with me. So I'm curious about how people charge their EVs right now. Is the bigger opportunity in the commercial space or in the residential space where you also have partnerships?
Yeah, so a lot of the charging starts at the home, and it's certainly a major part of all charging solutions. So we look at charging for most of the consumers where people are going to eat, sleep, play, and work, and that's in a bunch of different areas. So if you look at some of the partnerships that we've done so far, and you look at some of the deployments that we've done so far, it really supports charging in all those different areas. So our business really is around enabling customers to be able to either stand up charging commercially where they want to access customers, and enabling homeowners to be able to stand up charging in their own place so they can charge at the lowest cost possible.
And when I think about the business of EV charging, it almost feels like a chicken and an egg sort of situation, because you have analysts arguing that your operating success, it really hinges on EV adoption to spur the greater need, of course, for chargers. And then, of course, I would imagine your standpoint is something that it's range anxiety that is depressing EV demand, and that's what's going to unlock it. But just walk me through your calculation here and how you're thinking about sort of the depressed EV demand that we've seen.
Yeah, so we've actually seen, Q1 demand on our network, which is, we provide hardware and software for customers that want to electrify. So ultimately, we don't own the stations at the end of the day. We don't sell or monetize energy. So when we looked at our network, the 306,000 ports, the Q1 demand was actually up 20% year over year, which implies that, there's more vehicles, being sold that are putting pressure on the existing network. So, and that's excluding home. So when you look at that, what it really says is that the market's starting to stabilize from a demand standpoint. And then you should see the next group of chargers start to follow as the demand continues to increase. The traditional OEMs are seeing growth year over year on the EV side. Most of them are. Obviously Tesla, was down a little bit year over year, but they sell a heck of a lot of vehicles throughout North America. They're the biggest dominant player. So it's not like EVs stopped selling. It's been, the demand has started to increase year over year. And we expect to see, with the demand on the current ports that are available in North America, we start to see more ports being needed through the back half of the year and into next year. This will start to stabilize as EV adoption increases over the next couple of years.
Well, I'm glad you brought up Tesla because I've been thinking about the competitive landscape here as well. Of course, in addition to selling cars, Tesla has its supercharger network. You have other competitors out there as well. What does it look like to compete? How do you do that at this stage of the industry?
Sure. So there's a DC en route market where you're going to see a lot of high power chargers deployed. And then you're going to see an AC market continue to mature throughout hospitality, events, arenas, kind of everywhere you'd go and spend a long duration of time. So we see the markets developing, equally in both of those as far as continued deployments. But one's going to grow a heck of a lot faster than the other. So the best place to charge is where you're going to spend the most time and on purpose. So when you have to use DC charging on route, it's because you're going someplace where you need to supplement normal charging that you have access to. So we see the business cases being built out, separate from each other. There's a case for DC charging in all the places that those go. So that's the EA model, the EVgo model, the Tesla model. And then we see a strong AC market through all the use cases in North America. That's everything from commercial to workplace is a huge part where we see charging growing. Employees are starting to rely on that more than ever as a place to charge. And then hospitality and convenience segments are continuing to grow and seeing good utilization on AC ports. And then DC utilization is starting to increase as more cars are being deployed and there's more pressure on that network.
Well, you make a good point that, of course, you want to charge where you spend the most time, and that's because it takes a long relative time to charge your EV. And you think about range anxiety, it's not just how many charging ports there are, it's that I don't want to be stranded waiting for my vehicle to charge, of course, whereas I can get gas in just a couple of minutes. And when you think about shortening the time that it takes to charge, how long of a process is that to finally get it on par with just refilling your gas container?
Yeah, I think the experience is a little bit different. I have 2 EVs and I have a gas car still. I have three cars in the family. You get kind of used to every morning your car just being full, and you kind of take it for granted once you've been an EV driver for many years. So when I'm at home, I don't really think about how long it takes for my car to charge. I come home, I plug it in, and it's just full every single day. So that's the easy part of the equation. The place where consumers have to really think about what their EV experience is when they're doing longer trips, which is not the norm in the U.S. that people are doing, over 200 miles or 300 miles at a time. But when they need DC charging, what is the place where they're going to do that charging and they're going to want to spend some time? So if you look at traditional, fueling on the gas or diesel side, they're probably in and out in, 10, 12 minutes, depending if they, run into the store. So taking that to 20 minutes, what is the experience that these retailers want to provide for their customers? That 20 to 30 minute range is kind of on average what you're going to see. So when we look across like all the usage, all the DC usage that we see in the United States, you're seeing average dwell time anywhere from 20 to 40 minutes. And 40 minutes would generally say that someone came in very, very low on state of charge. They're down in, the high single digits, in the low double digits, high single digit range. So they're spending a substantial time at the pump. But what we're seeing at the charging station is a behavior of that 20 to 30 minutes. And we think that's acceptable if they have the right experience and the right, things to do where it's convenient to a coffee shop or they can grab something to drink or use the restroom. That's, I think, what you're going to see there's going to be much more of an experience deployed around DC charging.
And Rich, before I let you go, I do want to talk a little bit about the share price, because you take a look at shares, they're down nearly 82% over the past year. That's an industry-wide conversation. But what do you think investors broadly are missing about the space?
So I think what they're missing is we enable businesses to be able to stand up electrification for their business, whether that's in fleet, commercial, or home. So and you look at the LG partnership, why we did that. LG aligns perfectly with us, what they've done for many, many years on how they serve their clients on home, on retail, and healthcare. these are all places where we knew that there was going to be more advancements in technology when it came to hardware and other energy management and power and all the stuff that LG does. So when we look at this, this is about a better together with LG in solving the problems on helping businesses stand up electrification. So ChargePoint, we don't have to make a bet on energy costs. We don't have to make a bet on utilization as that port gets deployed. So as long as we're providing world-class hardware and software and solutions, whether that's with a third party on the hardware side or with our own, as long as we can continue these businesses seeing the value of providing this for their customers, ChargePoint's in a pretty good place long term. Now, there's tons of pressure around utilization and auto, and obviously a lot of the politics around EV in the U.S. But I can tell you, after being an EV driver for many years, it solves a lot of problems that consumers need to solve as far as the convenience and certainly long term over a cost standpoint. So the vehicle prices will continue to become more competitive in the United States. The technology is going to certainly continue to be better over many, many years. And, charging is going to be a big part of people's lives for a long time.
All right, Rich, I think that's a good place to leave it. Appreciate your time today. Our thanks to Rich Moore of ChargePoint. Let's get a check on these markets. We're going to do that with Abigail Doolittle.
So we're looking at the NASDAQ 100 down ever so slightly. If the decline holds, it will be the first down day in 8 days. But let's take a look at the S&P 500. Last time I looked, it was slightly higher. So we have this pull and tug between these two indexes, up just a little bit. So it'll be interesting to see which direction wins out in terms of this rally and an all-time high here for the S&P 500. Interesting to note, the index is higher, so too is the VIX. The 2-year yields higher as bonds sell off a little bit. That's probably one pressure on stocks, especially big tech, the valuation. And then oil up about 0.8%. If we take a look at the S&P 500 and its range, it's really an impressive breakout here. Take a look at this breakout out of this range. This is a formation that typically would break to the downside. We don't know if it's a real breakout yet. One thing I would say is take a look at the RSI at the all-time highs then back in December, much higher than where it is. That's a fancy way of saying that the current buyer's not quite as confident. And if we break it down relative to stocks, well, we do have, not surprisingly, with the S&P 500 up ever so slightly, Accenture higher on strong bookings and an AI play, Nvidia, the world's most valuable company, but Broadcom giving some of those gains back. And then take a look at Apple. This is the one I really want to point out, down 1.4%. This stock may be starting to break down out of its big rally. More needs to be seen.
All right, keep your eyes on Apple. Abigail Doolittle, thank you so much. Coming up, Glenn Hubbard. He is Columbia Business School professor of finance and economics. He joins us to talk about why education should be a top priority on the political agenda. This is Bloomberg.
Can AI transform the way your people work now?
Building a home, throwing in a line, and finding far-off campsites with the people you're closest to. Upgrade your truck, Jeep, or Bronco with over 1 million parts and accessories and bring your truck to life. Real truck.
What's inside your ETF? Does the manager have institutional experience? Is the strategy built for all markets? With the Parametric Equity Premium Income ETF, you know what's inside. Inside, you'll find a novel income strategy designed for growth and tax efficiency from a leader in innovative solutions. Get to know what's inside PAPI, powered by Parametric, the symbol of alternative income.
If you want to give it that, moniker, but it's not the same intelligence that I have.
I especially am afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself, actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
All right, it's time now for our daily Wall Street Week conversation. And today, we're focusing on the evolution of economic models and higher education. Glenn Hubbard, the Columbia Business School professor of finance and economics, he sat down with Wall Street Week's David Weston earlier.
The historical debate over mercantilism is one we're living through again today. The traditional response from economists is you need to focus on markets. Yet, as economists, we often make that sound very abstract. I mean, why should you care about markets? The reason is that they are delivering the best outcomes for all of us in the economy. Now, markets don't always work perfectly. The title of the piece I wrote was Markets for the People. When would you step in? You'd step in for national defense reasons, for example. You would step in to support basic research and innovation. But we need that kind of a new focus. We don't need to go back to Hayek and Friedman on the one hand or the mushy industrial policy of the Biden administration on the other.
And there are massive slowdowns. I mean, the Great Depression, the Great Financial Crisis. I assume where you would say, yeah, the government does need to step in there. You can't just let the markets bail us out of that.
Well, correct. But let's go back to the intuition economists like Keynes had at the time of the Depression. It was really the notion of the state being a kind of actor of last resort in a true crisis. Really awful events, the state steps in. But now the state keeps stepping in. When does the state not step in? That's not what Keynes had in mind. And it's not even a question about budget as much as it is dulling the competitive senses of the private economy if the state is always going to bail us out.
Is it a question of democracy as well, ironically, in the sense that once the people see that they can get bailed out, then there's sort of an impetus to have their elected representatives bail them out, and people want to get reelected, so you say, let's make sure we smooth over all the rough patches.
Exactly so, except the problem is we can't do it. If you look ahead in the next 20 years of the nation's fiscal policy, we are going to need to spend more on aging Americans. We are going to have to raise spending on defense. No one seems excited about raising taxes. This math doesn't work.
How do we create a society where we have equal opportunity without guaranteeing results?
Great question. I think we need to have a right to opportunity, much as we have property rights in markets. But a right to an opportunity is not the right to a result. So to be specific, a right to an opportunity could be much more support for education, for training, for places that have been left behind, for the government supporting much more in the way of basic research. All of that's very different than a system that says results only matter.
How do you compensate for very large differences in where people start out in the process? I mean, we all differ of where we start out, no matter where we went to school, where we grew up, whatever. But there are some huge differences here where some people are well behind in terms of their wealth, in terms of their background. How do we make sure that they have an equal opportunity that compensates for what they've been deprived of for generations? For example, the black-white divide.
It's a great question. There are a lot of reasons we have black-white wealth differentials, some of which, sadly, come from public policy errors over decades. I don't think we can fix that overnight, but I think what we can do very quickly is make sure that everybody has access to the same opportunities and have a system that encourages work, encourages wealth building for anyone who wants to do so.
Glenn, through so much of your work, you often come back to education. And education is not just getting a bachelor's degree, it can would be trade schools, various education. You talked, for example, about land grant schools in your book, The Wall and the Bridge. But whenever we have money to spend, we don't seem to spend it on education. We find all sorts of other things. We can have wars we spend money on. We can spend all sorts of money on infrastructure, which is a good and useful thing. I don't ever hear that coming up to the top of the list in the agenda politically.
Well, it's got to, and we've done it successfully at least twice. So the land grant college movement was a decision by political powers that be that the country needed a different set of skills. We were going from an agrarian economy to a manufacturing economy. After the Second World War, the GI Bill was the same kind of intervention. Today, with globalization, with technological advance, and especially new developments in artificial intelligence, we need that kind of moonshot approach to education, and it's got to come up to the top of the list. Unfortunately,
at 11 a.m. Eastern Time, we get our weekly EIA data, crude oil inventory, forecast to draw of 2.8 million, and a prior build of 3.73 million, with a range of a build of 3.729 million to a draw of 4.8 million. Gasoline inventories, forecast a build of 1.05 million, and a prior build of 2.566 million. Distiller inventories, forecast a build of 1.05 million, and a prior build of 0.881 million.
Rather,
Crude Cushing inventories, prior a draw of 1.593
That's where we need to
million.
be spending a lot of money. Writing big checks to the Harvards and Columbias of the world from the federal government, I'm not sure it's good for that problem. It may be good for basic research or things like that. But yes, our elite universities need to get their house in order and fast.
And that, of course, was Glenn Hubbard. He is Columbia Business School professor of finance and economics. And, of course, Wall Street Week's David Weston, who is sitting to my left. And that was an interesting note to end on. Of course, he is at Columbia University. But like he said, writing a big check to a Harvard or a Columbia, maybe that's not the solution here to when we're talking about the higher education issues.
In fairness to Glenn, he's never been talking about that. He thinks actually there are other approaches that make a lot more sense, like trade schools, like community colleges. But what you heard there was an implicit criticism of both Bidenomics on the one hand and also President Donald Trump's approach to this. You heard at the beginning, he talk about mercantilism. He's talking about Donald Trump and the move to replace income tax, for example, with tariffs. On the other hand, he finds Bidenomics and industrial policy rather fuzzy. So he's trying to find a different course. He's got a paper coming out tomorrow, actually, on foreign affairs, trying to come up with a third way for economics.
Yeah, we'll definitely keep our eyes out for that one. But it's interesting. I mean, you just walked through the Trump and the Biden campaigns. And like you discussed with Glenn, it seems like education not exactly on the priority list of either campaign necessarily.
We've spent so much money in this country on so many things, including the Iraq War. I mean, trillions of dollars, literally. And imagine if we'd taken just a portion of that and really devoted it to education, really building that up. And it would address some of the issues we also talked about with a real disparity in where people are starting out in the supposed competitive race. We want to have equal opportunity, but that doesn't help much if you're starting 50 yards back from where your competitor is.
Yeah, very good points there. Great conversation. And who else do we have coming up on Wall Street?
Well, tomorrow concerns France and actually Western Africa, believe it or not, with Ian Bremmer of the Eurasia Group. We talked about that election coming up in France, but also something we may have missed, which is Russia moving into Western Africa. That's coming up with Ian Bremmer and the Eurasia Group.
All right, looking forward to those conversations. Our thanks, of course, to David Weston. This is Bloomberg.
Can AI transform the way your people work now?
The world needs ways to reduce carbon emissions,
especially for heavy industry. We're working on solutions in our own operations,
like carbon capture and clean energy from hydrogen.
So who are we?
Believe it or not, ExxonMobil. And these solutions can help businesses like yours.
Or yours.
Or yours. Heavy industry with low emissions. Let's deliver.
What's inside your ETF? Is the manager a jack of all trades? Is it run by an algorithm? With the Eaton Vance High Yield ETF, you know what's inside. Inside, you'll find thoughtful bond selection from fixed income specialists with bona fide active management credentials. Get to know what's inside EVHY, now available from Eaton Vance, the symbol of high yield done right.
Building a home, throwing in a line, and finding far-off campsites with the people you're closest to. Upgrade your truck, Jeep, or Bronco with over 1 million parts and accessories and bring your truck to life. Real truck.
Forces in front of us that may keep it a little bit higher than people expect. My view is whatever the world is pricing it for a soft landing, I think it's probably half that. I think the chance of something going wrong is higher than people think.
Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
All right, let's take a quick look at some stocks
At
hitting
11
highs and
a.m.
lows
Eastern
this
Time,
morning.
we get our
And first
weekly
up, we have the
EIA
Williams
data.
companies
Crude oil
hitting a
inventories
52-week
forecast
high
a
after
draw
it
of
was raised to
2.8
buy
million
at Argus
on the prior
Research.
build of
Also,
3.73 million, with a range for build of 3.729 million to a draw of 4.8 million. Gasoline inventories forecast a build of 1.05 million on the prior build of 2.566 million. Distiller inventories forecast a build of 1.05 million on the prior build of 0.881 million. And crude Cushing inventories prior a draw of 1.593 million.
A share. Meanwhile, let's take a broader look at these markets right now. You do actually have higher volume. According to my screen, volume up 37% compared to its 20-day average. Not exactly translating into big price moves if you take a look at the broad indexes right now. The S&P 500, it is higher, but not by much. You can see the S&P 500 currently higher by about 0.1%. Meanwhile, the NASDAQ 100, I'm going to go ahead and call that unchanged. And it's interesting, even though, of course, we are seeing Nvidia build on its momentum, build on that rally that brought it to be the world's most valuable company, you aren't seeing the follow through necessarily when it comes to the NASDAQ 100, currently unchanged. And meanwhile, you take a look at the 2-year Treasury yield higher by about 3 to 4 basis points, just at about 4.75% on that 2-year yield. Now coming up, Nancy Tengler, Laffer Tengler Investments CEO and CIO. She joins Bloomberg Technology with Ed Ludlow next. That does it for Bloomberg Markets, though. I'm Katie Greifeld, and this is Bloomberg.
Can AI transform the way your people work now?
The world needs ways to reduce carbon emissions,
especially for heavy industry. We're working on solutions in our own operations,
like carbon capture
and clean energy from hydrogen.
So who are we?
Believe it or not, ExxonMobil. And these solutions can help businesses like yours.
Or yours.
Or yours.
Heavy industry with low emissions. Let's deliver.
What's inside your ETF? Does the manager have institutional experience? Is the strategy built for all markets? With the Parametric Equity Premium Income ETF, you know what's inside. Inside, you'll find a novel income strategy designed for growth and tax efficiency from a leader in innovative solutions. Get to know what's inside PAPI, powered by Parametric, the symbol of alternative income.
Surgery to be an administrator and a hospital leader.
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are 3 fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number 2, they value process, but they hold themselves very much accountable to execution. They understand that it's good to
1 minute remaining. I'll lead with EIA crude oil inventories.
Did you take the tumor out? And then number 3, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Good morning from our world headquarters in New York. I'm Menace Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg
Draw
Technology.
2.547 million. Draw 2.547 million. That's higher than the expected draw of 2.8 million. Gasoline inventories. Draw 2.28 million. Draw 2.28 million. Lower than the expected build of 1.05 million. Distiller inventories. Draw 1.726 million. Draw 1.726 million. Lower than the expected build of 1.05 million. And crude cushion inventories. Build 0.307 million. Build 0.307 million.
Exclusive reporting. An AI video startup, HeyGen, hits a $500 million valuation in its latest funding round. We do discuss with the CEO. A very quick check-in on markets. The S&P 500 very briefly hit the 5,500 historic mark and then pulled back. We're flat on the NASDAQ 100.
So the US to sell $70 billion in 6-month bills on June 24th to settle on June 27th. And the US to sell $70 billion in 3-month bills on June 24th to settle on June
27th. Later in the show, we're going to bring you details of what played out 24 hours ago on social media. Michael Dell saying that Dell is
US to sell $69 billion in 2-year notes on June 25th to settle on July 1st. The US to sell $70 billion 5-year notes on June 26th to settle on July 1st. The US to sell $44 billion in 7-year notes on June 27th to settle on July 1st.
Car dealers across the United States were
Mic check 1 2.
Second cyber attack this morning after an initial attack yesterday compromised the CDK software platform and halted business. These are some of the publicly traded dealerships and auto retailers that are impacted in the here and now, all moving to the downside. Let's get to Bloomberg's Jeff Stone on our cyber team. Okay, let's start with the latest because it's moving quite quickly. There was a second report of an attack this morning. What do we know?
That's right, Ed. This is a big, messy cyber attack. You mentioned there's a second incident just reported. That happens as this software provider that works with more than 15,000 dealerships around the country is already trying to recover from what looks like is going to be a pretty costly outage. The nature of the incident isn't quite clear yet. We know that dealers are waiting for more information from the company, but we know it looks bad.
Jeff, as I said, you're kind of a key member of our cybersecurity team. What was the vulnerability here? What was the security breach, and where did it happen?
The nature of the breach, the point of entry, is certainly still under investigation. But this incident fits with a recent string of attacks, certainly in the healthcare sector, that are targeting kind of customer service software providers and almost innocuous companies that a lot of your viewers won't think about on a daily basis. These companies sit at a key point in various supply chains, and when they are hit, there are ripple effects, costly ripple effects that have major impact throughout their supply chain.
Jeff, as you know, I've covered the automotive industry for quite a long time, and I've learned so much about CDK, 15,000 customers, front office, back office, but also like the names that have been impacted here on the name brand side are big ones like Subaru, Toyota. What have the responses from the companies been, and what have they actually been telling customers as well?
Please give us time and some patience. We know that dealerships, like I said, are waiting for more instructions from their parent companies, from CDK, as this continues to unfold. For now, a lot of dealerships are slower to make sales. We know that sales representatives are increasingly working with paper transactions rather than the quick automatic stuff that we've all become used to. So it's very challenging. They're waiting for more information.
Jeff, this is one hack in a series of hacks over years that you and I have discussed on the show. In terms of its scale, where does it sit in those that you've covered in recent years?
Growing. The healthcare sector, like I said, has been the main focus over
AMD's looking good, huh? God damn.
The cost of this, based on the number of dealerships certainly affected, seems to be high. We're waiting to see if there will be any government action on this or any guidance from the Department of Homeland Security, for instance, in terms of understanding the full scope of the
All right, let's take a look around here.
For now, it's still calculating.
Bloomberg's Jeff Stone on a developing story. Thank you. Another big story we're tracking is over in China, where e-commerce giants have been slashing prices and using celebrity endorsements.
XLE looking good.
Enthusiasm for the 618 shopping festival. Bloomberg's Henry Wren joins us for more out of London. This is a newer one for me, Henry. I've been reading about 618, but if you were to summarize, you'd basically say that the consumer in China is getting an
I can't hold tight, guys. I can't read what you guys are saying
from the big e-commerce names.
Yes, indeed.
Yeah, there's some stuff we have to look at this morning.
Price cuts.
So, hold on, let me turn this off for a minute. So, today is quarterly rebalancing, right? Hopefully, you guys got the. Hopefully, you guys got the brief last night that said to sell the open this morning. We did come straight down, right? Blast down to the hourly trigger here. We're probably not done going down. I'll talk to you guys about this in a minute, but I have a few things I have to go. I have a few. So we tagged the 5,500, which is awesome to see up here. Slammed into the 5,500 on the call wall. I've got a bunch of stuff to do, though, here this morning. Give me like another 15 minutes. I'm watching in the background volume this morning on individual issues, on single tickers. AMD is on that list. So just a heads up to you out there that
sports hit seasonal.
AMD has over 10 million shares trading on it as of like early this morning, like 10 million. So these are one of the tickers that are likely going to get rotated into during this rebalance. So I'll show you guys what you can do to. Hold on, give me. I'll do it right now. Hold on.
$99 a year for.
One quick second here.
Service.
No, wrong one. All right, so this is FinViz. Some of you guys know this website. This is called FinViz right here. And on quarterly rebalancing day, so today and tomorrow is quarterly is typically quarterly rebalancing. If you go to like Investopedia, they'll tell you that they can't tell you when it's going to happen. But it's typically today and tomorrow. If you click on Screener, if you guys want to go to this website at home, you can. It's just finviz.com. And then you click on Screener here. And when you click on Screener, this thing's all free too. You can pay for the premium. I used to pay for it, but all in all, it's really not needed. And then if you click in the middle here, you'll see it says descriptive, fundamental, technical, ETF, and all. I normally click all. Oh, look at that. Look at that. SPX is coming right back for that call wall again at 5,500. So anyways, down in here, you'll see, where is it at? What am I looking for here? There's two. No, it's average volume, and then there's another volume. I was looking at this on another computer. You could probably tell here that I don't know where the fuck it is, but there's relative volume over here. Right here is relative volume. This one's not too bad. Relative volume, you could do over, right? Like relative volume being over 3, over 10, over 5. You could use this one right here. Like that's over 5 and then over 10. Brings the down a little bit, but in all honesty, I like this current volume one. And for a day like today, over 5 million or over 10 million. Over 10 million will give you a small return. Look what I'm saying. I'm saying over 10 million to give you a small return. You know what sucks about this? It's too late in the morning now. It's too late in the morning. So I did this right at 9:30. Now a bunch of tickers are showing up, but over 10 million. Had you run this at 9:30, 9:45, you would have had much less returns. And then I switched this to a view of a chart.
IMS score give us.
Kind of sucks that because the volumes come in now this morning on a bunch of these tickers. And what I'm looking for here are tickers that have been down for the quarter, like Allure over here, ALUR. I'm looking for tickers that have been down in the quarter. Now, the market cap on this one's really low. You could change the market cap to, 150 million or billion, like million or whatever. AMD was on this chart, though, earlier this morning. I think there will be some rotation to this, and you can do this at yourself at home and just be looking for tickers that have been going down for the entire quarter. You can do a bunch of other crap on this too, depending upon like your if you want your fundamentals to be good, if you want your sector to specific sectors, if you want 52-week moving average, you could do something like that, like 30% down, something like that. 30% below the high, right? So 30% below the high. Allure is still on that list. This is bringing it down. Amar is in that group right there. Nicholas sucks, of course. Rivian looks like it may be ready to rock to the upside for the next quarter. Riot, Neo. And just look for, you can even do market cap to make, if you don't want to be looking at companies that you think are shit stocks or whatever. I would run this in the morning tomorrow as well, but very early. The data becomes a little bit more cloudy as the day moves on. But like that first half an hour of the market open, you want to see if trades are being placed on or more volume than usual on these tickers. Now, a few things to go over here this morning. We got to go over a few things here. So with yesterday being closed, we've pretty much traded like the day was open. Had the day been open, you just didn't get to trade it. It's pretty much where we wound up here on the open this morning. Now, what should happen today is we have the first down move in the morning, right, off the opening bell. And then what we should do is look like we're going to go back up and fail into the close at 4 p.m. So this should look bullish, though it is not. Or at least historically, it's not bullish. It should, like, this should all look normal. Like, hey, we're going down here. We tagged this, but we should sell down into the closing bell. Let's bring that over there. And right around, there's a few times in here I'm looking at. I want to be looking at 1 o'clock this afternoon and 2 p.m. 1 and 2 p.m. as signals to sell. And if we do sell, if we fight to get up today, like fighting, failing, and then we get it right around that 2 o'clock, and boom, we blast down through the hourly trigger. And then we have a recovery into the close at about 3:30, right around, it should be a little bit farther, right around 3:30, a recovery back into the close. And that would be that DivX trade that we've been talking about ad nauseum. So we were pretty unsure what would happen with the day off yesterday this week. Like, would they compress things down? Would they get it all done and not do anything on Juneteenth? Or would it still track with Juneteenth? Just you couldn't trade it, and that's what it looks like happened. It looks like we traded Juneteenth, even though we didn't, and we should get a blast down.
EU economy.
Right, we should right around 2 o'clock, 2:30, somewhere in there. In about a 5% knockdown. Let's take a look at that. So this is about 5% right here. Like right in here is about 5%. So
it's for 4 weeks.
Whatever happens between now and 2 p.m., I'm looking for a bloodbath of some kind. And we go straight through the hourly trigger and it blasts straight down. Right around 3:30, we slam right back up into this close up in here. And we also expect another day of down. So at a minimum, we should get today be a down day. It's not really down. I don't know. Is it red yet on the day? I don't know. I have to look and see if we're red yet or not. One quick. Yeah, so we're still up right now. We're up on the day 0.15%. But I do expect whatever this is to fail. And I don't know if we go back up to tag the high. The pre-market high first, then come back down or not, or if we just look like we're going to trap you all in, and then we blast down here into about the 3:30 hour. If we get this blast down here, I'm going to trade some 0-day calls up into this bell here. The only warning that I would give you would be that they're going to dump all these shares into Friday, and we have a real bloodbath coming on Friday. It should get ugly. So we'll see how it goes, see how it plays out, and see if we can trade that today. Not 5%, 0.05% down. Hey, if you guys aren't reading the market briefs, then you don't know what I'm talking about. 0.5%. I just measured it out for you. So right here, I just measured it right here. I can show it to you again. Ready? I'll measure it out one more time for you. You see it right there? Is that better? Right there, 0.5% down. Goes right down to about 546.71. If you guys get the market briefs, if you read the market briefs, you already know about this trade. I've gone over it, I think, 3 or 4 times in briefs. So we top-ticked this perfectly today. This got top-ticked almost near perfectly today, this morning. We got the high above 5,000. So no musical chairs, none of that bullshit. And today we should. I don't know if we're going to get it, though, because of that day off yesterday. But if we do get it, I'm looking for it. So if we do this like bullshit up here, we do this like bullshit, looks like it's going to recover, and you get all bulled up, and then they just roll it down on you. I expect it to start at 2:30 p.m., but I remember that they've tried to do it at 1:30, 1 o'clock, 1:30. Like 12 o'clock, they take a stab at it. And then like 1:30, they take another stab at it. And like 2, they roll, like they take a stab, another stab, and then by 2:30, it just goes bam, rips straight down to the depths of hell. And if that happens, we'll take that trade. So we'll just sit here and wait and watch and see what happens. The last time I think I made on the downside move, I think I made 2,000%, and then I made 3,000 on the upside. It was a huge day. I made a bunch of money on this day, so we'll see if this works itself up. So this is twice now we've taken the trade. This will be the 3rd attempt at this trade. And I think the last time we took the trade, we took it success. I think we had 3 trades in total. 2 of them presented themselves, and the 3rd one did not. So we'll watch and see what happens. See if we can catch the trade again today. See if we can get into it. Matter of fact, let's just snap in some lines here. There's one right there for 2:30. We'll start paying attention at 1 p.m. We'll make this like a pay attention line. And then we'll do one for 12 p.m. Just so we're aware of it as we come into it.
Agreement is of concern.
To be aware as we come in at 12 o'clock, 1 o'clock, but the killer is 2:30 usually. All right, give me just a few minutes, and I got some stuff I got to do for you guys here in the background. I'll be right back with you guys.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
a.m. Eastern Time, the US sells $70 billion in 4-week bills, prior high yield 5.26% and a prior bid cover of 2.95.
Hey Binky, did you get to sell your spreads on the bell today? Binky, you out there? Hey, what's up? Thank you so much. I appreciate that. I think I got sunstroke. You got any sunstroke or no? From all that heat, the sun on you makes you feel like you're sick, but you're not. Yeah, nighttime. One. I only got it at night. I felt it last night. Oh shit! Thanks, John Haggerty. I'll turn it off right now.
White House Economic Advisor Brainard says there's every reason to expect further progress on inflation and not enough progress on housing and healthcare prices. Brainard says aberrations in the first quarter inflation haven't stretched into the second quarter. At 11:30 a.m. Eastern Time, the US sells $70 billion in four-week bills, prior high yield 5.26%, and a prior bid cover of 2.95. Shortly expecting the results of the four-week bill auction, I'll lead with the high yield. 5.23%, 5.23% bid to cover ratio, 2.93, 2.93. The US sells $70 billion in 4-week bills and awards 82.66% of bids at high.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
All right, here we go. Rid of that. Break time. Be right back. Do I need more lights on? I don't know if I'm getting more of a tan right now or if it's just dark in here. We had some dude, I thought that that's really bright. I thought that that's really bright still. Hold on a second here. That's better. More light. Getting it's really hot where I live. Like oppressively hot. Like it's as hot as anything I've experienced in the deep south. It's that hot. Like the hottest days in the deep south, it's probably been that hot here in Michigan. Oppressively so, like max humidity, max heat, and then I've been working outside, and I'm catching a sunstroke of some kind each day. Like I feel like I'm sick. Like, you know, you get like that pre-sick feeling when you have yeah, the coast is nice. I don't know, like Foley Beach, man, is great except for about 2 months out of the year. And it's like it's really hot. It's really hot, really humid. And so I'm outside in the sun. And we live on the edge of a time zone, which is good and bad. It's great in the summertime because it doesn't get dark here until 10 p.m., 11 p.m. So matter of fact, when you guys see me awake at nighttime, right? You guys are probably like, why is he awake so late? We don't even eat dinner until 10 or 11, 10 p.m. We eat dinner like in the summer months, like maybe 9:30, 10, somewhere in there. It's like light outside at 9:30 at night here, being on the edge of a time zone, which is kind of nice because it gives you like better time of the day, or not better time, just extended hours to do what you want to do, especially if you have a job or whatever. You get extra sunlight at nighttime. And oh, my missus photo? No, that's Becky Quick. It says Jim cursing. She's mad at me. She doesn't like me cursing. She kind of looks like my wife, though. She kind of does. Some of you guys have seen pictures of my wife, right? She's kind of hot. I don't know why she's with me. She's got no business being with me. Or am I saying that right? However that works itself out. I don't know why she's with me. Like, isn't it like ass, gas, or grass or something? I didn't have grass. I was poor. So, I don't know why she picked me. Didn't have any money. What else? I think it might have had to do with, if I had to guess why she's with me, two reasons I think that she's with me. When I first met her, I told her no. Told her I was too busy. I'm like met her. I'll tell the story sometime. I think I've told it before here, but it's a great story how I met her. But I met her and she wanted to hang out, and how we met was really a cool story. But then I left her. I was like, I gotta go. I got other things I gotta do. I gotta get out of here. But here's my number. Call me when you have a chance, or when I have a chance, I'll call you or something like that. And she had told me that no man had ever said that to her. She's like, no fucking guy has ever told me no. I think that was the first. That was the hook. I was too busy. And then the second hook was I didn't want to get tied down. A lot of people, you go to college, you go to the army, whatever the things you do, and you go back home and you never leave. Not that's a bad thing. That's okay. Most people do that. The majority of Americans do that. My wife my wife has this huge family, right? They have a giant ranch out in the middle of fucking nowhere. It's the loneliest place in America. And you either stay on the ranch, do the ranching, or you leave, right? Run. And her dad was military and then was Department of Defense. Wound up being like a big director. And he lived all over the world. And he lived everywhere. And you name it, they lived there. And I mean it, like around the world. So she went to school all over the world. She had no roots anywhere. No permanent, deep, long-term friendships. And that was my same situation with my family. Very similar. Where we had no real roots. Nothing that tied us anywhere. And so I thought I wanted to stay where I was stationed. And I had met her where I was stationed. We were both in the Army. Both of us were in the military. And I didn't want to stay in this one place. I didn't want to stay most of my life. Most of my adult life, I wanted to move and experience things. Personally, I was like, well, you only get one life. What if I die? I want to experience the world. I want to go places, do things, and I don't want to just do a vacation to a bubble. So that's what we did. We traveled a lot. We traveled and worked from place to place most of my adult life. So no real roots anywhere. We've lived everywhere, literally. A year here, 3 years there, 5 years there, 7 years there. And only recently started to settle down. As soon as my oldest got to an age where we needed to like have more roots, that's when we stopped moving and looking for some stability. And yeah, some of you out there, Addie, I know you've moved. I know you've lived in different places. But that's what we did. That's what we liked. So now it's fascinating too because our children do not like moving at all. They liked it when we were young. They didn't really pay attention, but now they're like, we want to stay here and this is what we want to do. So we're doing that for them. They like, oh, here we go. What time is it now? 12 o'clock put crew coming in right now. Coming in hot and heavy. This is the first attempt at it. This isn't going to be the last. They're going to do it 3 times today. Now, do you know why this is happening? Do any of you know why we're going down right now? It's not really a put crew. We assign names to things. We dumb shit down around here. But do you know why this is happening? It's short calls on spreads that are expiring today. So it's like a magnet for the day. And
it's nuclear doctrine.
Now, if you're selling calls for today, your expectation is that those calls expire worthless today. If you're at home, not you, but there are some professionals out there that are watching this and they're going, you know, I want these fucking calls to expire worthless. And more importantly, Friday too, right? And then, of course, next or whatever the end of the month is, the end of the month as well. So, and this is the trade where, so basically this, like a professional will come in and they'll ramp up the 0-day call buying, force dealers to chase price really far north, right? And they'll own they'll assign those shares, take the shares or take the calls and convert them, the 0-day calls and convert them into shares, take the ex-div payout and then dump the shares on the market. So there's probably some schmuck out there thinking, oh yeah, great. We'll see if I don't know if it happens today. It might not happen, but if it happens, it's going to be hilarious to watch it happen. Cause you know, it's going to really piss off, you know, you didn't have to stay in SPY shares for, a whole fucking quarter to get the money. It's like a double whammy. Anyways, yeah, so my wife, back to my wife. She's blonde, blue-eyed, and hot. Dude, especially for her age. I shouldn't say that about her, but she's getting older. And and she doesn't do any of the stuff. Like, she doesn't do any Botox. She doesn't do any of, like, the fat sucking out of the face. She does none of that shit. And it's so awesome. I don't know why she's with me. She could be with any man she wants. She could, if we got a divorce tomorrow, she could date anybody. She could date a bazillionaire, millionaire, trillionaire, whatever, and she'd be fine. She'd be fine. She'd get any guy she wants. I don't know why she's with me. It could be. I think it's because of that. I think that she liked the. I think that she liked that. She wanted to move around. I wanted to move around. She liked the adventure in life. She wanted that, so it worked for us as we had very similar backgrounds. Our socioeconomic backgrounds were similar. Not that you can't have different backgrounds, but it works way easier when you come from similar backgrounds. We both went to private Catholic school. We both did this. We both did that. Well, we had very similar childhoods, very similar expectations on life, that kind of stuff. Do I give her whatever she wants? Yeah, I'm not the boss of anything. I'm not the boss of anything.
No need for Russia's preemptive nuclear strike, according to...
She doesn't want fish lips. There was a time when she did bring up getting a boob job after she had her first child. Shouldn't say this stuff. I shouldn't be this personal. But I love her for who she is. I don't want no boob job. Like, I don't want you to, like, I don't need you to do any of that stuff for me. And so she didn't, and I'm grateful that she never did. So, and she looks great, dude. She's got great boobs. She's awesome, and she's my best friend. She really is my best friend in the whole world. It's the only person in my life that I've trusted no matter what at all times, no matter what. And she's been there for me through thick and thin. Everybody has their ups and downs in life. I hope, or if you haven't, maybe you haven't had your ups and downs in life. But she's always been there for me no matter what. She's not listening. I have a soundproofed room I built for an office. Not that you can't have boob jobs and fish lips and all that stuff. People like that shit. I get it. Some people want it and need it. Some people are like, she's just naturally beautiful. If I was like, I can't blame anybody that's like, I want to do that stuff, or I can't. It matters. Your looks matter, right? It sucks to say that, but in our society, it does. People want you to be in halfway decent shape. They want you to be halfway decent looking. Not that that's a good thing, but they do. You know that's true, right? And then not only that, women have stupid pressure on them to look a certain way. It's insane. I got 2 daughters. You can see it. That's like, and that's fed to them too. Like everything about their childhood and teenage years, makeup and boob jobs and shave your legs, and you can't have hair in your lip, and you can't have hair in your boobs, and you can't have, women are put through the ringer. If you think guys have it bad, like women have it even like triple what we have.
Precision.
Yeah, it kind of sucks, right? Kind of sucks being a woman in that sense of the word, in that sense of things, right? There's always fucking, demands. You have to look a certain way. You have to dress a certain way. Although I will say this. I want to say something, though. This is fascinating. Tell me if I'm getting old or not. I was on the water the other day, and I went to go do a river rafting trip. And I saw, tell me if I'm wrong on this, because I could be. Seriously, I want you to be honest with me. I went to go to this river rafting trip, and, like, if you're going to wear, like, a G-string, right? Or a G-string in the front, too. Like, in like something that just covers your nipples up or whatever. I get that. If you're gonna like be sunbathing, like it's appropriate for like sunbathing. Or maybe you're in Vegas or something at a hotel, pool. Maybe you're at an adult thing or whatever. But I went river rafting the other day, and there were women, young women, that were dressed like with bathing suits on that I was kind of shocked at. Not that I care. I just didn't know if times have changed or whatever. I was like, wow. I was like, that doesn't look too so functional. It's like, not that I cared. I didn't say anything. I didn't. Maybe I'm just getting old. I was like, I don't know. I'm not really a puritanistic either. It just seemed kind of odd. I was like, tastes are changing. Yeah, that's what I was thinking. I was like, I wouldn't wear that if I was going river rafting. I'd probably wear that if I was sunbathing, but I wouldn't do that river rafting. But fuck it, to each his own. And then I thought to myself, I was like, are those OnlyFans girls like going on dates with these dudes? And the dudes were kind of dweebish, so no offense to dweebs either. Just I was looking at these women, I was like, these might be OnlyFans girls. Like these could be hookers. Not that I cared, it just seemed kind of bizarre. The whole thing was kind of bizarre. Times have changed. Okay, cool. Yeah, times have changed then. It just looked kind of weird. I was like it was more like appropriate clothing for what you were doing than they looked like whores or anything like that. Yeah, I know. Being a dweeb is the cool thing. Absolutely, 100%. My kids are dorks. I love that my kids are dorks. I think it's a great thing being a dork. Yeah, more guys were in thongs. It wasn't really a thong. It was like, I don't know how to explain it. It wasn't like a thong. It was like like one woman had like, she had her top on, right? And it was like literally like a strip across the nipple and then like another strip or two across the nipple. That was it. And then the front of her had like a strip in the front, like straight down. And I'm like, damn, she did a good job waxing. And then the backside, she just had the cracks thing and split. And I was like, fuck. I was like, you going on a river trip, like down a river through the rocks and shit? You rub your ass in those fucking rocks as you go through it. Well, whatever. I don't care if people are going to do either. They looked hot. I'll say that. They looked hot. Nerds unite. All right, hold on. I got to drink some water here. Do they ever meet so here's my next question, because I don't know anything about this stuff. Do you ever, can you pay to be with the girl on OnlyFans? Can you like pay for them to go on a date with you?
Mortgage rates 4 to 6.
I don't know. You tell me. You let me know.
April.
Can you, if I was paying for an OnlyFans girl and I said, if I gave you $5,000, is that enough? Oh, is it too much? $1,000. Would you go on a date with me? That's not really what they do. Or right on, Winky, right on. I didn't know if they do that or not. If it's just the live shows, or if it's like live shows and meetups or whatever. There was a couple of girls there. There was a couple of girls that I was like, they kind of look like OnlyFans. Yeah, I'm asking for a friend. Is there still good old-fashioned escorts out there, or is it you still do the old school escort thing then? I don't know. If I was an escort, I'd be doing the OnlyFans thing. I would want to get my face out there so that I could meet up with people. It's like more advertising. All right, we'll get rid of this one right here. Yeah, that's what I would think. If I was an escort, I'd want it. I mean, if I was an escort, I'd be like, fuck it, we'll do an OnlyFans too. Would seem logical. It says some of them do. Yeah. Oh, more of a stalker risk. I've got NVIDIA down here, don't I? Why are you guys asking about NVDA? What is that not clear enough? What is that? Is that not clear enough, or why are you asking about NVDA? What's that right there? That's right, Binary Dragon. I'm just messing with you. Now I want to short 2:30. 2:30 I'm trying to short. I want to short 2:30 p.m. I think this is a fake breakdown here. Well, not fake, but I don't think we actually sell it until 2:30 this afternoon. 2:30 on the button. I could be wrong though. This whole week is kind of fucking funky. No other way to say it. So we could do it right now. The crystal ball is not clear. I think I said that on Monday. I was like, yeah, this week's gonna suck. Only due to the fact that we have a day. No, not just that. It's not just the day off. It's also like Vixpiration is early. Like Vixpiration came before OPEX. It's all kind of fucked. The whole fucking month is, or the next 2 weeks is kind of wonky for timing. So Apple. So when Apple was splitting, okay. So number one, Apple is a great analogy for NVDA, but early Apple splits are a better allegory or analogy or analog. You want to be looking at the splits on Apple when they were the company. This was years and years ago. And typically Apple would go up 25 to 35% after the split. They would go down a little bit after the split, like a pullback. Then they would put on another 25 to 35%, and then you'd get the roll. But that is a good point. Apple is a great analog, but not recent Apple. Older Apple was the better analog, in my view at least. So I think you're going to see 150, 170 easily on NVDA. Still, I think isn't it 55.65 on the collar? I think the collar might be 55.65. Yeah, still in the collar trade for the end of the month. Absolutely, yes. Let's talk about that really quick. So let's have a quick chat about that too. If you are a pro trader, you are going to get from me an extended outlook for SPY, QQQ, and IWM so that you can plan your quarter, okay? We can do SPY right now if you want. The gist is this right now, okay? We should be holding 5,500. Listen to me closely here. Now, we're on a 1-minute chart right now, okay? This is a 1-minute chart that we're looking at. So we can't talk expectations on a higher frame on a 1-minute chart, okay? Like if we go below 550 for 5 minutes or a day or a quick rip down, that's not losing 550. Generally speaking, this 550 here should hold. The thesis here is that if 550 holds, right, we should trade like 560 and then 570. Listen closely. Get your pens and papers out. We should hold 550, and we should trade 560, 570 for the month of July. into about the minimum, the 19th of July. It could possibly extend into the 30th, 1st, or whatever of July. I don't know what the last trading day of that month is off the top of my head. But just off the top of my head, without saying anything or without showing you guys anything, we should hold this zone. Like, this should be held. Regardless if we blast out, regardless if we do this today, we go down here today and come right back up. We're in a 1-minute chart. We gotta remember that, when you're scaling out on something and you're scaling in on something, it doesn't look the same, does it? So this 550 area, just keep that in mind, okay? This 550 area, as long as it holds, we should be trading to the end of July, 560, 570. From there, we should have a major correction down to about 515. That's the lowest I want to go. You guys have heard about these inflection points from me before, right? Where I said I don't want to trade 485. Now we're higher. I don't want to trade 550 lower than 515. And that should be the correction that we get. And for another move higher into the end of the year. That should be the worst, but we should get one. We should get a pretty fucked up corrective move from like 565, 565-ish, somewhere in there. Not quite 570, but like 565, 560, whatever, and get a pretty shitty move to the downside. It's a pretty giant move down. Now that move down should be consolidative too. Let's look at, you guys want to look at some of this stuff? We can if you want. Hang tight here. Now, some of this stuff hasn't quite matched up this year either. There's been some
the dollar extending gains versus the.
Give me a second here. I'll see if I can bring it up.
Last up around 0.4% at 158.77 yen.
All right, I'll bring it up for you guys. So here it is right here. Can I bring this down? So, I mean, we got the down move. Look at how late that down move was. We just kept grinding higher and higher and higher. Now, you might be wondering to yourself, why did we keep grinding higher? You might say to yourself, well, Cap, this didn't match up. But there's a reason for that. Do you know the reason? I don't know if you guys know the reason for that or not. Banks were pricing in a rate cut. So they were grinding this up to blast us down here. Once they figured out we weren't getting the rate cut, they still blasted it down, but we continued on again. So this right here is the normal trade, okay? That's the only reason that we blasted down. Had we cut rates because it was being telegraphed, or either the Fed's going to tell us before it happens, so they'll grind us up to the expected rate cut, or the banks are trying to time the rate cut, or had we just traded normal and then we get an unexpected rate cut, would squeeze and then come down for liquidity. But this was the banks drinking the Kool-Aid, thinking we were getting a rate cut. Once we didn't get the rate cut, boom, they dropped it down. The seasonal low came in. Now, since then, we've been trading kind of close to normalcy, right? Come up, come down, right? Come back up again, and there's an expectation that we're going to do another drop up here. But to move up again you can see this here, right? Moving up again and having a peak around the 145th trading day. and I want you to remember this, the 145th trading day, okay? Right inside of here. So you're going to expect a pullback of some kind. You can see it right here, right? Pullback and then trade higher. Where's my hot men calendar? Hot men. Hang tighter, boys and girls. That puts us at July 30th. So this is July 30th. Okay, July 30th, right here. This is considered range. Well, not hold on a second here. So this is the 145th day, okay? Right in here. Then we get range expansion. That's right here. This is when we trade sideways. Just ping-ponging along, right? Bam, 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 bam. To the downside. So you'd expect some range expansion from about July 30th into the 173rd trading day. That's September 9th. So the first week, second week of September. And this is when you get your election volatility trade. This is when we panic. So it should be like a panic move down for the election. And this panic move down, they're going to tell you we're going to crash. That Biden sucks, or I don't know, Trump, maybe Trump's pulling ahead in the polls or something like that. And we should bottom out right around the 190th day, and that's October. Early October, like first, second, third session of October. So I'm expecting September to be a pretty ugly downside move, okay? But then we should rip some faces off up here, and that's where you get your 6,000 end of year. Make any sense? So pullback, great month of July, right? Sideways for August, September down, October come right back up and end of year. That for right now is the kind of the thesis here. Yeah, we should sell the election, and what we need is put fuel, right? We need people bared up. We need people stinky and mad and scared and all this other shit, and just start loading up. And then they turn around. What's funny, too, do you know how you mark this stuff?
A 5-week low against the dollar. Lost down around 0.4%.
Look for Art Cashin. What they'll do is, like, there'll be an article. There's almost always an article. And they'll roll out Art Cashin, and he'll be out in the fake trading floor, and he'll be like, elections are volatile, and things aren't good, and it's very dangerous. Bad things happen in elections, and the stock market doesn't like uncertainty. And he'll tell you all that shit, and they'll push it all over the internet. You'll read about it. Everyone's going to tell you doom and gloom. And then it'll begin to recover as we head into the election. And you're going to think that, whoever gets elected, we're going to then roll back. It's just a recovery. It's just a recovery trade right now. We're getting the bounce right now, right? So from October to November, we should get a recovery bounce. And you're going to think that on election night, we're going to roll down to the fucking depths of hell. And they're going to roll Art Cashin out once more. And Art Cashin's going to come out and he's going to say, the election is done and there's gridlock. So the market should go up. And I apologize to you if you think otherwise. And the market should head higher. Now, I don't know if Trump wins if that will be true, that statement. Typically, if a Republican becomes president, that statement I just made is false. They will shit can the market down to the depths of hell. If Trump wins, they'll flush it. So it's not doom and gloom. They'll just flush it. So I don't know. I can't say that statement's correct. I don't. Part of me think I'm on the fence with this right now. Part of me thought, or I had about a moment about a month ago where I figured that Trump would win. I was fairly certain Trump would win about a month ago. Uncertainty now that he's going to win. I have some uncertainty now that he's going to win. What's really got me, there's something here that really got me by the ass right now. A lot of both of their tax plans, both Trump and Biden's tax plans that I've looked at, are both very similar to a destructive path for the middle class. I don't know how else to say it. It's okay that they both have those plans. It makes sense that they both have those plans. It's logical because of our system. How our debt cycles work. This is that late stage debt cycle part where the government taxes you, or companies, they tax corporations, or they tax you. And the end result is that your demand from you is destroyed. They need to wash everybody out of the system, and they're going to be forced into it to wash everybody out of the system. So, however, they can call it whatever they want. They can package it however they want. One way or another, you are the one that's going to take the hit. And I need you to know that if you're an American, I need you to know that this is by design to wash you out of the system if you've made poor choices in your life as an adult, or if you're just old. There's an intent to wash you out so that young people can get a chance, and they can once again inject the economy with cheap, easy money. That's how we do things around here, right? We give you cheap, easy money. You get to buy a house, start a business, go to college, whatever that is. You either do well with that money or you don't. If you don't do well, they wash you out. They take all the money back and they re-inject it again for the next generation. Or a next generation, maybe not the next generation. Short-term debt cycles are like generational. Long-term, a little bit more. And right now, if you look at boomers, they're filthy fucking rich, right? You guys know this, right? I mean, they're like fucking rich. So we're probably closer to a long-term debt cycle than we ever have been. Good morning, David. How are you, man? Good to see you. Well, so this is like a cyclical thing for capitalism, right? It's our form of capitalism. And I was looking at Trump's plans, and I was like, this fucking guy's doing the same thing Biden's doing. They're both doing it. The one thing that irks me about all of this, though, is we're not getting anything from it. We're not getting like we're not getting. I was looking at I was looking at both their tax plans, and I'm like, we don't get a fucking thing for either of these tax plans. I was looking at the IRS, the overhaul of the IRS and funding of the IRS to go after corporations and stuff. And I'm like, this is great. I like this. But then I'm like, where the fuck is the money going? Why do we not have fucking health care? Like, why the fuck is college not paid for kids? Like baseline college. That's all bizarre to me. Infrastructure. Prison reform would be nice. Yeah. There's a few big things that I'm scratching my head. You know, number one country in the entire world. Should be an easy one for us to knock one of these things out. If we're gonna do that, if our government's gonna tax the fuck out of us, either through corporate taxation or individual taxation, one or the other, I don't see why we don't get a benefit from it. Oh yeah, I agree, 100%. I thought that Trump would win because he wasn't going to do that. He's doing the same thing. Catching some blood right now on the hourly trigger. Trading below the hourly trigger currently. Coming into, what time is it now? They started it back here at like 11:08. Did it again at 11:41. 12:15. Coming back in with some blood right now. Got 3 layers here. One right there, one right there. One right there.
S&P 500 extending losses, just down 0.1% now.
If you got the market brief last night, I said to you to take all of your longs off at 9:31. So you should have no risk on the market right now. If you do, you could sit in, you could weather it for a few days,
signs of buyer exhaustion,
as it should come back.
S&P 500 did briefly top 5,500, remaining above that technical threshold. That typically hints at an overstretched market. Wall Street also geared up for Friday's quarterly triple witching, in which derivatives contracts tied to equities, index options, and futures maturing, compelling traders en masse to roll over their existing positions or to start new ones.
Yeah, I talked to Binky on, I keep wanting to say Friday, but on Tuesday night he goes, it better fucking go up into Thursday. I go, all you got to do is sell it fucking 9:31. I was like, not 9:35, not 9:36, like right at 9:31. And you got a fat fucking print. And he's fucking short right now too, I think. I think he said he got short to the hourly trigger, but that was it. If any of you guys don't know what I'm talking about with this taxation stuff, I think most of you do. If you're new to the show, when I discuss this stuff, it's because we all understand short and long-term debt cycles. If you don't know what I'm talking about, or you're like kind of like, what the fuck is he talking about? What does he mean? I'll post a link right now for you so that you can have a base understanding. Tight here. Ray Dalio gives probably the best, likely I think the best explanation of short and long-term debt cycles out there. He sucks at timing them. He's real bad. He sucks really, really, really bad. Timing debt cycles. I mean, he's been calling for the end of a long-term debt cycle, I think, since the year 2000. I think the year 2000. He's been calling them since the year 2000. But theoretically, he does a very good job explaining the concept. Now, there were ends of short-term debt cycles when he's called for them. So he's right. He's been right, but you have like short-term debt cycles, long-term debt cycles, and he'll call for a long-term debt cycle, an end to a long-term debt cycle, and then he'll be wrong. But it'll be a short-term debt cycle regardless. So he's kind of right. But his explanation, if you don't understand how our economy works and you're a market participant and you don't understand how an economy works on a basic level, they don't teach this stuff to kids anymore. Do they require economics in high school anymore? I don't know if they do or don't. I don't think that they do. But anyways, short, long-term debt cycles. He does a fascinatingly simplified, easy to understand explanation. You should understand that stuff. You need to, because that's, you kind of get you understand why we inject money, remove money from our system, why we do that, how the business cycle works. You get an understanding as to, like, is the Fed doing anything that really matters? Like, are the Fed operations really why we go up and down? Or is it a real business cycle? And why we do these things? How you get caught in these things? It's important for you to understand that, because you don't want to get caught in this stuff as you get older, and be on the wrong side of this stuff. How natural is it versus how are they nudging it, right? Is the Fed nudging this stuff, or are they the reason for this stuff? Visionary 316, I love you, man. Yeah, I am too. I'm on Team Nudge. I've read a couple Fed chair books, and they all say the same thing. Once they're done being a Fed chair, they're like, yeah, I don't really think this shit really matters. We influence. It's kind of like we're already at this point. We're just giving you a gentle nudge, right? We're just giving you a gentle nudge here. SPY now trading 547.26. We talked about a 5% down move earlier, or not 0.5% down move earlier. Let's see. Where did we set? Where do we track that from? Was it right here? Right about there, right? 545, right about there. Yeah, right about there. A little bit early today, earlier than I expected. I want more down, though, if they bounce this right now. I want more blood. Maybe make that white and then make it transparent. Like, that's nicer. SPOO's bleeding right now. 546.51, 49.50. Doom and gloom, baby. Doom and gloom. Nope. Hold on a second here. The hell's going on here? There we go. There we go. There we go. I got it. Sorry. I'm having problems, technical problems here in the background. Not quite S2. S2 is 546.06. Change that to yellow right there. Change that to yellow right there. Change that to green or red right there. Trading 546.06 right now. Probin. Oh. I'm assuming that some of you that are on puts on Friday are begging for more down, right? You want that green box down here? Not Friday, Tuesday. I'm gonna fucking say, if I say Friday for the rest of today, I mean Tuesday close or Tuesday. See if we can get more though. VIX 9-day looks like it wants to explode to the upside. Watch VIX 9-day down here. VIX 9-day looking for a breakout. Let's take a look at Bookmap for you, too. Yeah, we got more down we can do down here. 5,500 right here. We got more we can do. Right down in there. We can go down more. Maybe not at this moment, but we can go down some more. Give me one quick second. I got something I got to do here in the background. There is not enough progress on housing and healthcare prices. Don't believe that. My group of my investor group, there's all kinds of bad shit going on in the housing market. Real bad shit. Over the middle weekend, they were having conversations in this group about inventories. Inventories are piling up right now. I mean, piling up. These are renovated homes that are owned by investors that can't sell them. Yeah, so these are all investors, not necessarily like mom and pop, like your only home you own, but like real estate investor properties. The inventories are like a straight V shape right now. Yeah, I don't find any tears for those guys. Find no tears. Not only that, not only don't find any tears for those guys, but I didn't realize that a ton of them were. I didn't realize that new people jumped in to the pool. Like, there were a lot of guys that were doing it with all cash, or women, men, whoever. A lot of people were doing it the right way. But the last, 2015, I don't think it's that early, about 2017, 18, somewhere in there, people started getting, people that shouldn't be buying rentals or flips started doing some really fraudulent shit. Those people need to fucking go. So I'm assuming a lot of those people are people that own all those homes. NVDA, baby. Slam. Doo-doo-doo, doo-doo-doo. Let the boys be boys. NVDA, there's your chance. You want to buy the dip on NVDA? There it is. You got your dip chance. There's your dip buy. You guys all buying NVDA now? You guys party rocking like it's all night long? Yeah, it's pretty bad. Let me see if I can bring it up right now. Let me see if I can bring up some of the write-ups that I was reading yesterday. I mean, these guys in this group, they went crazy yesterday. They went down the rabbit hole. They were like, over here in this chart over there, all this over here and over there. They're smelling it, without a doubt. Let me see if I can bring some of this stuff up for you guys. Or I'll read it to you. U.S. housing starts and building permits plunge to COVID lockdown lows. What else are they bringing up? Well, this guy, Brian, says, asked an interesting question yesterday about sales and inventory in the Metro Detroit area. In particular, in the 200,000 plus range, he's noticing more finished product than buyers, perhaps due to an influx of flippers now playing the Detroit market since sourcing suburban flip houses has dried up noticeably. Here's a chart that shows month's supply, how long it would take to sell all the homes currently in the market at last month's pace of sales. I'm not gonna bring it into this group, but what else are these guys saying here? New listings in the Metro Detroit by month. We're obviously all still waiting for the pent-up inventory to hit the market, but the low rate lock-in effect, it seems like we'll be waiting a good bit longer. Where's the other ones that I was reading? There's one about Metro Detroit that I wanted to get to you guys, but I wanted to show you the chart for it, but I can't find it. At any rate, the point behind the statement is that inventories, right? These are homes that are. This isn't you as a homeowner. These are flippers and commercial buy and holders and all that. They're trying to dump properties right now, and the inventories are just going up and up and up. Nobody's buying them at the prices that they're asking. So these guys will go out there and they'll spend all this money on a flip when construction materials are high, labor is through the roof. They want to make their money back, and even nobody's buying, right? There's no buyers out there due to rates.
5-year tips.
And these guys are all hyper aware of the top in the housing market coming. So they're all panicky, right? Everybody's like panicky, panicky, panicky.
Do you want to stay up to date with the latest?
Yeah, they try to hold out. Absolutely. Absolutely, Bork.
Farm payrolls? Then sign up today and get our special offer of Financial Use Pro for a year's worth of our service for the price.
It's rates and pricing, 100%. Winky. So these guys are all holding shit. And like they keep buying, or not flipping, but buying and then renovating, and even new builds too, right? And they're like, well, fuck you, I ain't bringing my price down. Right? So you're quelching demand on the buy side. And what happens to these guys as they go bankrupt? You'll start to see bankruptcies, right? Bankruptcy after bankruptcy after bankruptcy. Nice down move. Let's see if price stays below the hourly trigger. If they can hold this price in here and pin it sideways for a little bit, or if that's bottom. Nice low there, 546.06 on S2. I'd really like to see it go down more. I want to see it down here. I want to see a bloodbath at 230. I want to see this look like a recovery. Everything is honky-dory. Everything's great. Buy the dip. We're off and running. We're going all-time highs again. Then they rip your faces off to the downside. No. No, not buying this. I don't believe this at all. I don't believe this at all. Right around 2:30. I'm looking for a bloodbath. And I think I told you in the brief last night, too, I would not be a buyer until, depending upon where we go, Friday close or the Tuesday close. Friday or Tuesday close. One or the other. For the run into end of month. For the run into end of month, it's either Friday close or Tuesday close. One or the other. That's what I'll be looking for a buy for the end of month. But if you want to buy this, have fun with it. Put a spread on down here. It's nice. 546. It's a nice little place to start along. Can't blame you for that. If you're to buy this right now, I don't think that's a bad trade. I want to pinstrike it if possible. I want panic by bulls. I want you to fucking panic. I'm assuming it'll only be Winky and I. Usually is. Probably Odin Nabunga will be there. Career Low will be there. There'll be a few of you guys out there will be hanging around, slumming for the fucking pickings in the bottom. Doom and gloom. All the bulls will be crying, telling you it's going to crash. There's usually like the usual suspects will be hanging out. Yeah, that's right. There's a gang of you out there. It's like 5 or 10 of you that are like waiting for it. This wasn't it. More than likely, this wasn't it. Yeah. There's a few of you out there. Usually the stream will have. Well, no, what happens is we get hit and run. I turned comments off today, only members only, because I don't want to hear it. So, like last time we did this, we had the comments open, and we just got overrun. Like just people hit and run the chat. Like the market's gonna crash. We're like, we're trying to buy a dip here. Quiet. And they're like, market's gonna crash. Market's gonna crash. Slam the fucking keyboard in the chat. So today I turned it off. I'm like, fuck that, members only. No, we're looking for two things. Yes, we're looking for two things. I'm looking for a bloodbath into about 3:30 in the afternoon, starting at about 2:30 in the afternoon. That's one trade to the close. I'm looking for more blood tomorrow.
It's time now at the top of the hour.
So, but it might not happen. It may not happen. This could have been it. This might be it.
The prior bid to cover was 2.58. The prior high yield was 2.242%.
This might be it right here. Crystal ball not clear right now. Crystal ball has been funky the past week. It's mostly about the day at the close day.
Perceived value of inflation protection at this stage in the cycle. Notice that other negatives for this auction include the Fed's unwavering commitment to re-establishing price stability, while positives include crude oil prices rebounding to the highest since late April, Hartman said in a note for BMO Capital.
Just note here that you have the 5-minute trigger coming down, crossing the hourly trigger. Would not be shocked to see a squeeze up and trade right up to that cross right now. Could easily trade right up to this point. We keep going higher. Just back check that 5-minute trigger right here. You can see, or the 5-minute trigger crossing the hourly trigger. Market's gonna crash. I know. Well, everyone gets emotional. Like, people get emotional. So what they do is, so people get emotional, right? Wherever they are, and they want an outlet for that emotion. So they'll go down YouTube and they'll search like stock market live stream, right? And then they'll go to that live stream and then they go in there and they just start fucking typing shit in. They're either like, they want to see the market crash, or they're long as fuck and they're getting torched. And so they just want a place to, and I understand that. They want an outlet so they can express their emotions. I get it. I understand why. It's understandable. I feel you out there. You got to pay $2.50 to do it, though. The 99th end of the world you've traded. Agreed. Winky, I'm up on the quarter. I'm not fucking it up. 100%, Winky. 100% brother. That's right. Now, if you think this is the bottom, maybe you're like, hey, you know what? I don't agree with Cap. Let's look at what you would look for. If it isn't the bottom, or if it is the bottom. So if this is the bottom. Oh, yeah. If this is the bottom, I'm going to mute this for a minute so you can see it more clearly. Should I just get rid of all this crap? I think you can. Can I hide this stuff? I think I can hide this stuff, can't I? Sweet. Awesome. If this is the bottom, I should use that more often. This is a good learning example for you out there, okay? So if this is the bottom, we had a pullback down. This is a pullback, okay? Any pullbacks go, or there's two kinds of pullbacks. There's a pullback to the hourly trigger, okay? So you have a pullback to the hourly trigger, and then we have pullbacks to the daily trigger. Those are always normal. Pullbacks on the hourly trigger are very frequent. We frequently have pullbacks there. Pullbacks to the daily trigger are frequent as well, and we're still on trend. Daily trend is either price or time. You can expect, if we're on trend, to go up on a daily trigger 1 to 3 weeks, sometimes 4 weeks. On an hourly trigger, 1 to 5 days, 1 to 3 days, somewhere in there. As long as we stay above the hourly trigger right here, the trend is still up on an intraday basis. Right? You have major pullbacks to the daily trigger. Or not, yeah, we have a normal pullback right here, right? We have major pullbacks to the daily trigger, but we're still on trend. We're still bullish and going up. Makes sense? On a daily basis. Corrections are to the weekly trigger, and major corrections are to the monthly trigger down here. That's a major correction. As long as price is above the monthly trigger, we're bullish. I want you to know that. As long as you stay above the monthly trigger, we're still on trend to the upside. Any break of that monthly trigger, that blue line, and we are bearish. Full bear. Like, we're in a bear market. This is a bull market. This differentiates between a bull market, bear market. Okay? Very important distinction. And that applies to stocks too. So if you're in a stock and your stock breaks below the monthly trigger, you are in a confirmed bear market for your stock, okay? Just need you to know that. Points of reference, right? So Right now, we're having a pullback. It's only a pullback right now. When we pull back, we can sometimes pull back, touch it, go throw it, and back up again. If you're looking for a major pullback to a daily trigger, you are looking for a rejection of the hourly trigger. So you'd want to see the break, the rejection, and then a new low. If you see that, you get your fingers on the fucking sell button here. You're going to get that new low, and it's going to fail and roll down. And this is where you're the buyer of puts for the next leg down, okay? You're not just like short up here and then you stay short, because it can come back up on you and take all your money away from you. You do it leg by leg, leg by leg. Let me say that again, leg by leg. Okay? Now, we just broke the hourly trigger, right? So if you're a bear, what do you want to see here? You have your low. Ah, shit. All right. Forget that. Hold on. I'll just draw it in. So now you have your low right here, right? So you're looking for a failure on the hourly trigger. And you're looking for the new low. All it has to be is a tick. Just a tiny little tick. That's it. You should, about 85% of the time, pretty good percentage, you should, not always. Sometimes they'll trap and will go straight down, but not normally. Normally, you'll see one more impulse from buyers. They'll be really weak at this point, too. It's like a one last gasp of breath before the water takes you over and you get sent to the depths of hell. And you'd be Johnny on the spot right here as a seller.
5-year tip sale. The pre-sale when issued yield is...
And this trade right here is typically the money printer for the next leg down. Right in there somewhere. Now, I don't know if that happens today. If it does, we're going to pay attention to it. If you're a bull and you think, well, this is all it's going to be, Captain, I think that's the bottom and that you're wrong. Cap, you're wrong. I think that's the bottom. What I would say to you, percentage-wise, just percentage-wise, like percentage of times you have a winning trade, you would wait for a new high on this previous... Damn it! Keep forgetting. Hold on.
When issued 5-year tips yield about 2.074% before the $21 billion auction.
What you would wait for... I'm like, damn it. If you were a patient man, like Winky just said, I'm patient. I'm winning this quarter. I'm not going to get in too early. If you're a patient man, what you would do, a woman, you would wait for price to retest, go break above this line right here. You would wait for a retest of the hourly, new high over here. Wait for the retest of the hourly trigger, and then one more new high. And you'd get continuation to the upside here. And you might, oh, shit. Let me do that again. Now you might be like, so you get the new high right here, right? Bam. You got the new high here. You back check, successful back check of the hourly trigger. Key point. New high right here. Come back down, and then you'd buy this one right here. Now you might be like, well, Cap, in my 20 hindsight vision, you ever see Jedi Marcus say, like, hindsight trading? Cap, if I had just bought that dip, I would have made so much more money, bro. That's called hindsight trading. Oftentimes, there's a high percentage time you would have lost that trade in this area here. Had you just waited, you would be making great money on a high percentage chance of winning
high yield
as a trader, and for a longer period of time that you can't see.
$1 billion in 5
So this would extend
7.44% of
here, and then back down
3%, and
it would continue on for 1 to 3 days.
And
so you don't need that bottom tick as my point. You just need the confidence that you have a high percentage chance of winning. Does that make sense to you? Like, you need that confidence that that you're in a trade that has a high probability of winning. And the more of those high probability trades that you take, the bigger the winner that you become, more consistent winner that you become. You become a more consistent winner. You really do. Look at these fuckers already trying right now. They're trying again. 1 o'clock in the afternoon. They're right back at it again right now. Relentless. So, we'll draw this in right now for you. That's the prior low. We've already done all these. We don't need these anymore. Get rid of that now. Get rid of that now. Here's your top tick right there. And this one becomes yellow. Bring that back up right there. Another hint in here, too, is you can see the breach of S2, right? See that breach right there? See how it was just, look closely. You see that bottom tick right there? That's the little algorithms breaking the support. Always looking for that, too. Did they break the pivot point or not? And they did. It's like a forewarning of what's to come. It's the math from computers. Algorithmic, finite math that computers use to say we're going to continue to go down. Get rid of this one. We just did that one. Bam. Gropex. I love Gropex. Gropex is awesome. How far down can we go? Is the market actually real? I love Gropex. Hey, G-Dad Gold, how are you? Hindsight psychology is losing. Well, the hindsight trading is brutal. It's one of the most insidious. It's one of the most insidious out. If you had anything that, like, the most insidious trader psychology, right on, G-Dad Gold. One of the most insidious trader psychology faults is hindsight trading. Whenever we look in the past and say, fuck, I was right, you don't think about the times that you were wrong. Does that make sense? Your brain shuts off the times that you thought we would have bounced and we didn't. And those are probably more frequent than you think. So it's very insidious. That's why I don't know if that's why Jedi mentions it, but hindsight trading is very bad. It's like insidious. And what makes it even more insidious is It works that one time. And so then you start buying the dip every time thinking, yeah, my brain is better at this. And you start to lose. And it's a fucked up cycle that traders go through. Oh, dude, NVDA now blasting down. Trading 130.62 right now. Woo! NVDA blooding it. That's even lower than I thought it would go. Woo! NVDA hanging dong to the downside right now. Hanging dong. Woo! What else we got down here? Oh, this shit down here too, right? 125. Woo! Woo-wee! And you just got the tick. Do you see that? Here's the first tick. And this one just made the new low. Did you see that just there? Let me show you that. Got the bottom tick. Oh, there it goes. Watch this. See how they gave the minute to get back up right there? Watch what happens. They took a shot at it just then, didn't they? They just took a shot. Wham! Slam, slam, slam. And watch it happen. Well, it's fairly price action. So they call this price action trading. Make it rain, bitches. Let me put the music on. We should get some blood here in a few moments. They're gonna try. Where's the music at? Come on, give me the music. Oh yeah, music. All right, what song am I looking for here? We gotta play Old Faithful. Please bring me death and destruction. I want you to watch this 1 minute trigger right here as it comes down. Should be like this. Something like that. Should I do it with a big, but should I do it with a big fat? It's been a big fat red line. Come on, Bears, put your back into it.
US natural gas futures extend losses.
I mean, this is your window, right? Rebalance. This is your time to shine. Nope, turn that off. We'll wait and see for the next one. Come on, Bears, make it rain. Step right in and slam it down in the depths of hell. I know they get 2 days. They get like today and tomorrow, and then they get like they might get an extension, but I don't know yet that's true. They might get it until the 26th, but I don't think that. Well, they might get it till Tuesday. Come on, Bears, you can do it. No! This is your time to shine right now. Depths of hell, Bears. Depths of hell. You haven't had any check. When was the last time you had a check back at the 5-minute trigger? Yeah, you had one right there. You had one right there, basically. Come on, Bears. All that gamma wearing off today. You got all that gamma coming off. You got gamma coming off, today and tomorrow, right? No, tomorrow's most gamma. Most of your gamma comes off tomorrow and then the 30th, right? 21st and 28th. All the gamma coming off the market. I had a what do you call it, reach out to me. I had a gold and silver mining group reach out to me. They wanted me to highlight gold and silver every day. They would pay me thousands of dollars every week. You want me to tell you who they were? Oh, let me find them. Let me see here. Who are they? Canadian Mining Report. You guys know who they are? Canadian Mining Report. They want me to do a gold and silver and a mining report every day and stream. We should get we should get somebody else to stream with me. We could do like a recorded show. We'll make it all like affiliate programs. I didn't say yes to it. Any guys like miners, gold, silver? They pay a ton of money. Shit ton. Like the dudes, like show sponsors, they pay. They'll make you probably make 100, 200K a year. Serious money with sponsors. You guys know that sponsors pay some stupid money.
Reverse repopulation.
I can't say that on stream. I know, right? People wanting to sponsor the show are like tearing up shit in the background. Who just said that I have to call somebody back? Call me back when you're free. Who said call me back when I'm free? I missed something. It's all the time. I got three emails this week. I got that one, and then I got I think I got 3 sponsors this week. Anyways,
74 counterparties take.
I don't have sponsors. I don't do sponsors.
$1 billion at the Fed reverse repo operation.
I think I would do sponsors. I just have never done it. I don't know. I don't know. I would do you know what I would do a sponsor for? I would do a sponsor with like Bookmap or Trading View, or like things we use, I would, or things I believe in.
$99 a year for our real.
I'd have to believe in it, I guess. If I was going to do a sponsor, I'd have to believe in it. Yeah, like somebody to come on it like for 5 minutes or something like that. You're in a small minor lotto? Yeah. I've had the crypto guys reach out to me a few times too. I've had like the crypto guys reach out to me a bunch. Miners, gold is recently. Some other bigger companies. I'm not going to mention names. Oh, position. Yeah, I'm just waiting on attorneys right now. As a matter of fact, I should reach out to him right now. I can take a break right now, Sam, and look into it. Well, you remember when they had that channel up on like Meet Kevin had like a group of guys and they had a channel. They deleted the whole fucking channel. It had like 300,000 followers. At least 300,000 followers. Something like that. Oh, they blocked the video from Wednesday because around the world because of all the music that I played. Well, fuck. That's how it goes. There's no Captain's Cheap Call out the next 2 days. There's no Captain's Cheap Call out the next 2 days. Only Captain's Cheap Call out is 3:30 this afternoon. Right around 3:30 this afternoon. And then it'll only be 0 dates. We're in rebalancing. So you're going to see weakness from now into at least Friday, if not Tuesday. Unless this is different than every other rebalancing every quarter. They're still buying the fucking dip down there in NVDA. Sonu. I use two. I pay for. What do I use right now? I don't think I use Sonu. I use what does Sonu do? Aren't they like a music service? Old school music service? Suno. So Jason, I signed up for what the fuck did I sign up for? Pretzel Rocks and some other one, and they both sucked. It writes the songs for it. Have you used it? So a couple things I got to do here. First of all, some guy was in there saying that someone out there was saying there were long calls or something. So I want you guys to know that I can't see the YouTube chat today. I don't know why. I can't see the YouTube chat. I'm reading the YouTube chat right now. For some reason, I've got Streamlabs up, okay? I want you guys to know something. I've got Streamlabs up. I'm supposed to be able to see the multi-chat, YouTube and Twitch, on my a display in front of me, a monitor. I can't see it today. For some reason, the YouTube chat's not coming up. I'm only seeing the Twitch chat. So I'm catching part of the YouTube chat on the screen here that you see. But I do have another display open with the YouTube chat on, so I'm trying to read through it right now. How far out of the money for a call do you think is a good place would be to get out of our blood before it takes off again? So Tactical FM1. We're in a rebalancing right now. What I would recommend is that you don't take any calls right now. We're in the end of a quarter, right? So we just had first quarter happen, then we just finished, or we're finishing Q2. Now, July is seasonally one of the strongest months of the year. Not the strongest, but it's a good month to catch a high. These 2 days specifically are rebalancing days. So you're going to see some tickers go up, or you're going to see volume come into some tickers, and you're going to see people taking profits on other tickers. You can see it today in NVDA, right? So I wouldn't be trying to take a trade with time on it today. Also, we typically have a down moment in the beginning of the month. So we should have like a down 2 days right now, right? As Gamma comes off the market as well, right? All these mechanical things in the background. You should see a down day today. You should see a down day tomorrow. You should see a run to end of month to that collar, 55.65. And then we should roll back down once more. And that would be like the first week or so of June, maybe the second week of June. Consolidation phase and a lot of volume, new quarterly flows, new monthly flows come into the market at that point. And that's when I'd be looking to put a trade on for the month of July. Now, if we get low enough before then, yeah, I would put what if we can get down to the daily trigger, I'd be looking for a trade myself. So it's either price or time. But today would not be the day. Not today, not tomorrow. So no, if you're trying to put a trade on right now, probably shouldn't do that. For the day, possible DivX trade, 3:30 p.m. 3:30 p.m. If it presents itself, it should be around that time. I got you, brother. So about 3:30 in the afternoon, right around there. And we should start bleeding as we get closer to this 2:30. Is this 2:30? Yeah, right in here. We should go down. We should get some blood in here. That's 2:30, and then 3:30 right here. We could even make this lower. We could even put that down there. I'd even like to see that, like blood. How are your calls doing out there? How are your calls doing? We could still squeeze a little bit. They keep trying to pound us down here. It's too early. It's gonna 2:30, man. 2:30 in the. I mean, it's like 3:30 is when I want it to be done. I could be wrong. Jason Hendricks, have you had success with Suno? Do you like it? So I was asking you that earlier and then got sidetracked with YouTube comments. Motherfuckers, everybody's top ticking everything. You guys are top ticking bottom tickers. Well, I caught that one bottom tick and I caught that one up tick. Then I carried the short over the weekend. No one called me. No maintenance fees, no carry fees. Fucking killing me. Me too, Darth Maul. I'm with you. I'm with you, Darth Maul. Just in the wrong direction. Suno, I gotta try it out. I'll try it out. Does it have a I saved it. I'll look it up. Does it have a ticker? Did you say it was publicly traded? Is Suno a publicly traded company? Privately held company. I saved it, Jason. I'm going to try it out. It does work good for commercials. I tried the other two AI music. They're not quite there yet. Well, I shouldn't say that. It's so the music is so bad right now, Jason, that I gotta go to the classical music to not get pinned. I think the AI music's gonna be there. It's just not there yet. Someone was mentioning that we should take the chat to Discord. I think Joe Donut mentioned, what if we brought the chat to Discord and turned the chat off for the show? And we could play music there. We could do whatever we want in there. Give me 5 minutes. I'm going to take a quick break. I got to do one quick thing. I just looked at it. I've just opened up. I haven't opened my emails for a couple days. I got to make one. I got to respond to somebody really quick. I've been sitting here now for, I've been sitting here for, I think, 2 hours or 3 hours. P-bottle time. Yeah, chat Discord. We could take into a general chat in Discord, and we could just do the chat there. I can just talk here in the stream and answer questions verbally here. But we moved the chat to Discord. It'd be kind of cool. Like if David wanted to show something, if John L. wanted to show something, if Winky wanted to show something, and we could look at shit, it'd be kind of cool. It's like it opens the doors to a better chat experience. What are you guys' thoughts on that? You guys like that idea? Don't like it? Or chew on it? I've bounced back and forth on whether I like it or not. I'm not sure if it'd be a good thing or not. It'd be cool because if Jason Hendricks wanted to show a chart or something, he could show it. Like, it's way more interactive. Yeah, I don't. I'm still. I haven't said yes to it or anything yet, but I was thinking about it. It was a suggestion to think about. I agree with Mr. Talking Monkey though, because if you were watching the show and weren't a member, you would be like, "What the fuck are they talking about?" Right? Do you think there's any way to show the Discord chat on stream?
Extend full, NASDAQ down.
That'd be kind of cool. We could show the Discord chat maybe on the stream. I bet I could build a bot that would see that scrolling chat box right here. I wonder if we could do like the scrolling chat from the Discord. Oh no. What's happening? Oh. Oh. Oof. Oh. 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 Oof. Ooh. Oh. I'm gonna let that hold on, I'm gonna let my belt out here for a minute. This might be your quarter, Nino. What do you think? Nino, give us an update. Do you think that this quarter will be your quarter? You got high volume coming in right now, brother, on your ticker, by the way, today. You got a high volume day. I was looking at it early this morning. You had high volume right on the open this morning. Oh, let that belt out. Hold on. Oh. Ooh. Let my gut out a little bit. Oh. Oh, fat bastard again. Ooh. Oh, gotta let it all hang out. Get that dad bod belly showing right now. Ooh. Just a note that S3 is 545.38. S4 and S5 typically is a buy the dip. Today, not so sure. Tomorrow, if we hit it, yes. Oh, here we go. It's one is coming out with the doom. Good job. Good job. All right, so if you want to give some doom, now is the time to do it. If you're a bear, in the chat, I'm going to open up the chat, okay? Hold on. All right, if you're on YouTube, Twitch is open, YouTube's open. If you're a bear, now is the time. Make your case right now as to why the market's going to crash. Go ahead, expound upon us your thesis. Yes, Daba. I'm aware of that. Yes. Tell me why the market's going to crash. I'm missing stuff what you guys are saying. I'm missing what you're saying. Dude, I'm reading two stream chats at the same time. Why? Oh, Bulls. You just hit R3 or S3 right now, Bulls. Ooh. Oh. Come on, blood in the streets, baby. S3. Woohoo! Oh, yeah. Trip to the lower extremes. Oh. A bank will fail this Friday. Fuck yeah. Sunday never ends. I like it. We should see a bounce here on S3, but we do have a target lower by 3:30 this afternoon. Demo goes, I want my name displayed on a board behind you. Don't trust this motherfucker. It puts on the lotion on it, crashes. Make the time to make your case. If you closed your longs at 9:31 and you got the brief last night, you should be making bank right now. It's like super fucking bank. Stupid fucking money short right now. You want to see how far down that is? You want some real doom? Oh yeah, baby. Whoa. Ooh. Oh.
Only notes that other currencies are gaining ground versus the dollar and
oh yeah. 532. Oh. Ooh. 532. Oh. Right on, Travis. I'm with you, brother. I'm with you, Travis. That's delightful. McDonald's bankrupt by end of day.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls?
Oh, Wiki!
Special offer of Financial Use Pro for
Wiki's like Wiki's at his in the basement right now in the bomb shelter, and he's like 532 done. That would be a juicy dip buy, wouldn't it, Winky? I'd fucking buy all that fucking shit. I would buy it all, dude. 532, definitely. 532 is a nice target. I would love that target. I'm down for that. I would be down for that. I would. All right, that's the case. Let's take a look and see. Let's take a look and see. How about this? I'll give you 535. 535. If there was a Captain's cheap call lot, Captain's used call lot, 535 would definitely be it. I would fucking buy that shit hand over fist. 100%. 535. I'm with you, Winky. 532, 535, 535. I'd definitely. Yeah, I'd be on that shit. Tomorrow, next week, I would fucking totally, I'd fucking suck myself off that. I would. I would love it. I just missed a run because of that. I was like, just come back to the Daily Trigger, and it didn't. No, not today. Not today. Calm down. Easy. Pump the brakes. Pump the brakes. I don't think we get down there. This is to me this is all rebalancing. This isn't any kind of doom. Rebalancing, gamma, end of month. New flows come in next month. I don't think we get down there. If we do, though, I'll be stoked. I'd be super stoked. I think every bull out there would love that. I think bulls and bears would both love that. It looks like someone was saying it's probably a 2% pullback. It'd be fucking awesome. Nice bounce off of S3. I am looking for another leg down around 230 to 330. See if we can get it. I don't know if we will. S3 is pretty good for the day. If you are a bear and closed out on S3, that makes sense. I don't know if we get another leg down to S4, S5. If we can get it, I'd like to see 544, right around there, 544 by 330. I don't know if we get it. This is a good target for right now. It's already 1:30 in the afternoon. So if you were a bull, and this chart was upside down, a little bit of sideways action, maybe one more stab at the bottom, one more downside move. I gotta take a break. Give me a fucking 15-minute break. Just a 15-minute break. Expect some form of relief rally right now. You did get S3. Congratulations. Boom. Nice downside move. Maybe we can trade this sideways and get our asses down into this bad boy over here, just down there. This is an S1 move. This tag right here is an S1 move for the day. So not an S1, but a 1 sigma move. You should expect. Hold on a second here. I would expect to trade at least to here. I would hope that we can get to here. Hope that we can trade. Hold on a second. I need to take this call. Give me just 5 minutes. I got to take a quick break. Just a note here that we got that tag earlier, so this one is done. That one is done. We tagged it early, so the next move is higher. Now, this could trade all the way up to the hourly trigger here, just as a check back all the way up. Just be conscious of that. You've got the half an hour trigger right here. So this trade can come all the way up here. No worries, Punch Bowl or Punch Pillow. keep note here that the VIX 9-day still wants to fuck to the upside. So look at this VIX 9-day right here. It's breaking out to the upside. So whatever upside you're seeing right now in SPOOs, just be wary of it that it's fake and false. That this breakout, whatever it may be, whatever this squeeze is right here, it's just a squeeze. I don't think this is bottom. It might be, but I don't think it might be bottom for a moment. Just be conscious of that VIX. That VIX wants to fuck. If you look down below here, this VIX 9-day is a great way. It's better than reading the actual VIX. And this is telling a different story here. So just be conscious of it. You can actually see it happening right here. So someone was asking about confirmation of the downside. This 30-minute trigger, like 2:30, 3 p.m., whoop, right in there. It's now 1:57, right? That half-hour trigger is going to cross this right as we come into this next half an hour, right around there. You're going to be looking for a new low. You'll look for a rejection, a new low, bam, and then we'll go down. You should see something like this. It should. Don't hold me to this shit, okay? Should see something like this. We squeeze up, right? Basically, it'll come back and up, back and up. We come up, right? Hold on. That looks like shit. Like up. Let's say we go right here, right? You'd want to see well, hold on. That's wrong too. It's like a squeeze right there, right? Squeeze right there. Squeeze up here. And if you see a rejection, you'd want to see that new low, right? If you see that new low, you know that the bulls are weak. Bam, that's when you enter over here, right? Failure to get above, new low, boom, on our way down. If it happens, I'll show it to you if you see it. If it happens, I'll show it to you. Hey, Winky, this is CCL, man. I'm very interested to see what happens up here on it. I'm interested, Winky. I'm looking at that like right around this area, brother. Like this 1646, 1626. I'm interested to see if it sells down or not, too. I just saw your email, man. I want to see if that holds or we continue down. Keep your eyes on this ticker. Look at this. So this is a Carnival Cruise Line, right? It looks great. It doesn't look bad. It looks really good. You've got the, like on the like just triggers, it looks great. Daily's crossing above the monthly. Price is positive. It's bullish now. They blasted it down here, coming back up to break out and away, right, to the upside. The only issue I have with this CCL is its velocity. Hourly's coming on, daily's coming up. This looks good right here. Daily velocity looks great for an upside move still, even if it pulls back a little bit. But on this higher time frame, this weekly doesn't look like it's done yet. This looks great down here. The monthly looks good. The quarterly looks good, but the weekly down here is what's got me scratching my head. So I don't quite know what that means. And like the weekly is like, yeah, you're going to have you're going to have this is going to happen. Then we're going to blast down the real breakout is lower. But I'm like, $4? That doesn't make any sense. Like, why would it be $4? Or maybe we don't catch the low. Maybe just a retest of $10. Maybe it's higher, like 678 or something. I'm not opposed to Carnival Cruise Line's breaking out for a trip up here, $25. I'm not opposed to it, but it's one worth watching just for the volatility involved in it. Because we're either going to get a massive fucking breakout to the upside or you're going to get a sweet-ass deal. Pay close attention to it. We're at end of quarter. It could be turning around. I think Winky thinks it's going higher. It's going to crank. But there's that one weekly velocity has got me on pause on it. And it does resolve regardless to the upside. I mean, it does regardless. It goes all the way up here. So, we're either going to go there now. We're either going to go there now or whatever blood that is, it's going there. So price target's still $25. Just don't know if it's now or if it's in the future. So Carnival Cruise Line, CCL, I guess pick your poison on this one. I don't like calls on it unless it's way farther out in time. If it could absorb a down move, then yeah, get fucking call spreads. Not financial advice. If you do the underlying, I would say hold on, don't sell. No recommend to sell, because no matter what, it does resolve to the upside. It looks like it wants to fuck to the upside, though. Look at it. It looks like it wants to go. I figured close the gap, you'd know. If we close the gap here, you would know if we're going to go higher or if we're going to reject and go down. So right around, I would say get out of longs here, and then we'll look to see if it gets the new high or not. That would change my opinion that it's going higher. SPOO's now cranking up into the hourly trigger. Price target 548.02. Yeah, that weekly, I don't know why that weekly fucking velocity, man. That weekly velocity is going against that upside move right now. And I don't know why it is. I don't know if it's news or something bad happens or whatever. Like they're going to announce something fucking stupid, right? They start ripping again and then something stupid comes out. I don't know. The fucking CEO is jerking off on live stream or I don't fucking know. Earnings on 6/25 on June. Oh, in 5 days? No shit. Oh, yikes. Okay. That could be it then, Winky. Watch for the back test of the cross of the 1 and 5 minute trigger. Watch this cross right here. For the push higher above the half an hour trigger. Yeah, that weekly velocity is like, that shit's suspect. It should be at a bottom right now. Holy shit. I can't show you the top of this, but I guess I'll put a crease in it. Crazy. This is you guys want something cool? I just folded it over. Hopefully you can't see this from the behind. I got to fold this down because then I want to identify myself, but you want to see something cool? I just found it. Hold on here. Old man breaky time. Oh, no. No, nope. This is my, I can't show it all to you, but that's my discharge. That's my honorable discharge from the Army. Look at how old that looks, how gnarly and old that is. I don't know if you can see that. That's when I got discharged my second time in the Army. I'm looking through like my I'm looking through all my like who I am stuff. I haven't seen it's so old. It's all yellowed. Yeah, it's probably the paper's really old and yellowy. Fucking A, man. They say that hold on a second here. Ah, shit. So I didn't do IWM for you guys, huh? Hold on. I uploaded the wrong chart. Hold on one second here. I got stuff I gotta do here. Hold on. Hang tight. I fucked up and did the wrong charts. Oh. Can't believe I did that. The market brief, I fucked it up. I uploaded the wrong chart. Edit. Let me see if I even why are none of these charts showing? Did I do the wrong fucking chart? God damn it. Oh. I hate making mistakes. Fuck. God damn it. Well, the good thing is that I have it on my computer. Gah. Oh, yeah, baby. I got it on my... Hold on a second. I'll put it up here for you guys. Oh, yeah. Hold on one second. You see it down here? Can you guys see that? Hold on here. Which chart is that? 24. Sorry about that. I really apologize. Upload files. Select the file. My bad. My bad. Insert. Okay. Can't be perfect, you know. All right. Update. Updating. Come on, update, baby. All right, good. We updated. Hold on one second here. Dude, my DD214. I haven't seen that fucking thing forever. Fucking DD214. Now they give you a card. Back in the olden days, they didn't give you a card. I'm in the box of shame now. No, I'm not. I'm not bullish here. No, I'm bullish on that trade to here. All right, hold on a second. I got. Hold on a second. All right, so I'm not bullish here. I'm bullish on that trade that was up here to here. Like I'm bullish on that trade, but I'm not bullish here. I think we already went over this earlier, right? I would want for me to get bullish here. For me to get bullish here. No. Remember when I said to you guys in the brief, I said it'll be a false breakout? You guys don't remember this. You guys don't remember everything. So this should look like a breakout. This should look bullish. If you wanted to get bulled up here, I'm going to be honest with you. No, I'm not bulled up. At all. I'm not bulled up at all. I can be wrong here, but I think they're rolling this shit down into 330. I'll be honest with you. You can get bulled up, though. I mean, I get it. Hold on here. Let me look at this on an hourly basis. Personally, I'm not. Did I just do something? Yeah, I'm not bulled up here. I'm just not. I don't even want to talk about it because I'll get back to the 30-minute there. I really am not. I'll be honest with you, what I want to see to be bulled up here, before I even get bulled up, I'd want to see the break above this right here, a new high, and have that hourly trigger. I'd be getting bulled up here. I really am not. In rebalancing, it's very rare that we're done. We might be. But I don't think that we are. There's too much going on right now for me to get bulled up here. I could be wrong here too, but I'm not anti being wrong on this one. This could be that trade is already in play right now. That take away the DivX, take away the money, take away the DivX trade could already be at play. But I'll fucking tell you what, the last two times, right? It was the same feeling, like we're down moves over, everything is hunky dory, and then they fucking dropped us like it was like a half a fucking point, like 0.5%, 0.05. 0.05, like it was like a fucking bloodbath, and it just didn't end. So I can't in good conscience tell you guys it's over. I can't. You can take that trade. I would rather miss the up move right now than get caught here in a trap. So my answer is no. Even if I miss the trade to the upside, I would rather miss that trade and be wrong than get torched for, just get fucking annihilated for a straight hour. So at least for me, there's a lot of spreads that are dying right now, and I expect us to continue to go down into the 3:30 hour. Under normal circumstances, I would say, yeah, that was it. We're done. We're going up. The mechanics right now, the mechanics of the market today and tomorrow is no. Like wrong day of the quarter. 90 days, right? 60 something sessions. Today, no. I put IWM up on the, I apologize for the chart mishap. So what I do is I make these charts, I save them to my PC, then I upload them to a cloud, and then from the cloud to the post. And I saved it last night, thought I uploaded it to the cloud. I couldn't find it on the cloud, so I just uploaded the same chart that I made last night for you, and I reposted it on the website post. Now, my take on IWM right now is that we're going to cycle into it. We're going to trade like, I think, 220 overall, ultimately, 220, I think. But we go down to like 160. There's going to be a false, it's a false, I don't know how to explain this nicely. Okay, how do I explain this? There is going to be, yeah, I know. There's going to be a, there's a good trade for Q3 to the upside for IWM, okay? I'm telling you guys. So there's a great trade right now for the start of Q3, okay? Q3 is going to be a good quarter for IWM. My assumption here is that you think that IWM is going to have continuation through the election and all that. It's not going to happen. It's going to fucking have a bloodbath. A fucking bloodbath. I said 160, right? Let me look on the higher frames in this fucking thing. Make sure I don't get this thing wrong. I'm saying this off the top of my head here. To make sure I got this right. Yeah, I got a 240 as the top. I got the first target as 220, 230, then 240. And then I've got a fucking bloodbath coming all the way down to 160, 150, 160, somewhere in there. So yeah, if you like, I like it here. I like IWM here. To, 230, 240, 250, somewhere in there. Maybe 260. But then it gets destroyed. It's gonna get fucking murdered. But that's a high point. That's a high target, right? It's a pretty good high target. If you're a pro trader, you're going to get this chart from me today or tomorrow. You're going to get an extended outlook from me. This is the bottom for IWM. I think it's worth longing IWM to those numbers, but it's going to crash after it's done. What do you guys have it going to? So ready? Let me write this down for you. I got a target of 220, 230, then 240. 220, 230, 240. But from that 240, it goes to 160. Yeah, I know. So I'm bullish. I'm bullish to 240. And even then, there's a pullback in there. It's like 230, then a major pullback, then 240, but then it goes to it goes to the depths of hell. Oh, you'll get that. If you're long the September 210s, you're gonna get bank. You're gonna make bank on it. But like price wise, not time wise. I've got 240 as the top. Probably December at some point. But whenever it hits that 240, whether that's December, March, whenever that is, get the fuck on out of IWM. Whenever we hit that 240, just mark on your calendar. How about this? If you are IWM bull, mark 3 places, 220, 230, 240. Go a couple points below it, right? Like go like 218, 228, and like 238. Set an alert and say, Captain Jim James says when we hit 240, that fucker's gonna get shanked. I mean bad. It's gonna crash. Not financial advice. Thank you, Winky. Not financial advice. Not financial advice. And it's either time or money. I don't care if it's fucking next week, 3 months from now, 6 months from now. All right, 2:30. This is these motherfuckers here. We're going to find out if they're going to come in now. We're almost there. We're going to find out if they're going to come in. All right, I'll do this shit afterwards. I'm just going to stay with you guys. I was trying to take a break. Let me just take a piss. I had a guy call me. I was supposed to take out of an airport. A friend of mine wanted me to bring him to the airport, and I couldn't. And now I got an attorney calling me for fucking documents and stuff. Everybody took a day off yesterday, and I took a vacation yesterday, and everybody wants to get work done on Wednesday. I was hanging out with my friends yesterday. My African-American friends I was hanging out with yesterday, so I had the day off. I got to take a piss, dude. I can't stand here the whole fucking day. Let me ask you guys. Let me get you guys' input on this. Do you guys think that we're going to squeeze? Let me ask you that question. Do you think we're going to squeeze? Maybe we can divine some. Maybe we'll look at the velocity and see. Let's look at velocity and see. We might just squeeze up into the bell. No decision yet. Velocity is neutral. It's just neutral. That could have been it. I mean, maybe it was just early. I'm not anti the ramp into the close. I got the flinch going. Yeah, it could have been early, right? This was 1:30 in the afternoon. Maybe they got what they wanted. Low enough for them to buy calls, 0 dates into the bell. Maybe that was low enough. Maybe they ramped that fucker right in the bell. If they do, target upside 550.70. $550.70 will be the target. That's a yellow bar up here. That's the target. Let me show the upside targets with pivots. It could be 551. That's R3. I could be wrong in that estimate. For that ramp. I mean, it's a fucking beauty, too. Could be it. I could be wrong. We might have gotten it already. If they do, they're going to ramp this fucker straight up.
NYMEX gasoline July futures settle at $2.50. Diesel July futures settle at $2.52. Natural gas July futures settle at.
Thanks, SurfX, for saying something. That could have been it. That could have happened early today. Are you guys all long here? Let me ask that question. Are you guys all long here? Are you guys all long for the ramp into the close?
And NYMEX WTI crude July futures settled at $82.17 a barrel, which is up 60 cents or 0.74.
I can't blame you if you are long. You are long. Right on. You could say you're long. It doesn't, I mean, it looks all right to go long here.
Protect your
IWM looks like it wants to fuck to the upside.
Juice Pro.
VIX 9-day getting rejected right now. That's good for the bulls. HYG is ready to rock to the upside. Everything's saying we're going to go higher. Hold on. Just trucking along. This whole line here on HYG, I drew this line out because it goes all the way up to 6,000. It matches us trading 6,000 over time. Dixie's getting murked right now. TNX looks bloody. Everything looks good for an upside move. Apple's kind of in the half. They're in the halfback trade right now. NVDA muscling it up, buying every fucking dip. They don't give a fuck on Dixie. They want that 145, don't they? Tesla's just putting around right now. I'm telling you what, guys. So that daily trigger is coming up on that weekly trigger. Whew. Tesla's going to fucking squeeze. It's going to fucking squeeze. GME looking bullish right now. GME looking sexy. CVNA holding right now. AMD holding right now, looking bullish. XLE is looking like it wants a pullback to go higher. CCL is waiting for a breakout right now. Up, up. Tesla squeezing up. Daily trigger's moving higher. I'm bullish on Tesla. I'm fucking crazy bullish on Tesla. And I don't care if it gets I don't care if we get if we get a pullback in the market or something. I don't give a fuck. I'm crazy bullish on Tesla. Everything is screaming up on Tesla. Like taken as a whole over like a couple months, it's ready to fucking destroy. I would not be caught dead short Tesla right now. It's like a powder keg ready to explode to the upside. Like not a 1 minute chart, but like if you open a daily chart on Tesla, it's ready to fuck right now. It really is. Oh, if we bleed down to the depths of hell though right now, oh man, oh man. If the dip buy was at 330. All right, I gotta take a piss. I really have to take a piss. I can't hold it in any longer. I'll be right back. Oh, please. Oh, God, give me the bull trap. Dude, what the fuck is going on? They're taking another shot at it again? Winky, what do you think? Oh, man. They're taking another stab at like die, 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 spy, die, die, die. I don't know if they're going to be successful, though. CCL still looking to pump right now. Let's ask Winky what Winky, what do you think? He is cracking his knuckles, isn't he? They want that fucking down move. Like all this gamma is coming off right now. Oh God, if we get that fucking bloodbath. If we get this fucking bloodbath, this like raining hell down here, it's gonna be fucking epic. It's gonna be fucking epic. We got so many good clips in this fucking broadcast, not even funny. We really do. If we bleed, I swear to God, if we go fucking down. I got it right here. Right, I got my target right here. Whoop. I think that's a 5% bloodbath, right? Not 5%, 0.05.
Brent crude futures.
About a 0.5% bloodbath.
71 a barrel. It's up 64 cents or 0.7.
About a half a percent. No, it could have already happened. That's the thing, is it happened so early. If we go down, though, I'm going to fucking laugh my balls off. I shit you not, I will. Too risky. Too fucking risky. It is a very dangerous moment in the market. This would be counter to Friday, right? Everybody thought it was going up Friday or down, and we went up. Everybody is thinking it's going up today, and it's going down. Yeah. Yeah, the internets know about it. Or maybe they're just doing it early. That's what I always think, Winky, is like you have a good thing, and then they just do it early. People are just like, it's going down anyways. Let's hit the fucking button right now for the downside move. Do it early. That's how we lose nice things, right? It's just like GME. Like you have a nice fucking thing nobody knows about, and then fucking too many fucking people know. Oh yeah, what you guys are asking about? You guys are asking about DIA or something. What were you guys saying about DIA? This isn't retail. These are professionals doing it.
U.S. money.
Oh, yeah. I see what you're saying.
Rose $21.56 billion for the week ended June 18th, according to iMoneyNet.
We're watching the big boys, what they're doing. But if they start, the problem with, but that's still, what your point still works, because The same thing happened with GME, right? You had professionals doing something, then you had retail figure it out.
You want to stay up,
and then you had
the bleeding edge of news.
Then you had more professionals come in and fuck with those professionals, right?
Financial Use Pro for a year.
So it's just like
of 1 month.
I don't know, just fucking doesn't stop, does it? It's like shark eats shark, shark eats shark, eats shark, right? Yeah, it is, right? Fuck yeah, it's like you get the sharks doing something, and the retailers figure it out, and fucking more professionals find out. They go, I'm going to go in there and fuck with those professionals that are in there eating them alive right now. Was somebody asking for whoever asked about the Dow Jones Industrial Average? Ask that question again. Hold on here. No, it's about to fucking squeeze. Well, you think we're rotating into? You think we're rotating out of heavyweights and more broad base for a rally? Is that what your question is about? Who asked that? Was it Ian? I think it all has to do with rotation. More broad-based rally. Let me look on the 30-minute here. Hold on. I should probably be doing this on DIA. Not futures. Hold on. Give me a second here. This is a tough call. On Dow Jones Industrial Average. This is a daily chart. It's It's bullish on its daily. It's bearish on its weekly. I don't think it's going up much more right now. You already did the 40,000 up there. Give me a second. Come on down. Come on down. Come on down. 40,000. 42,000, I mean. That's September. That's October. This is August 6th right here. I think you're going to do this with conviction here. Something like that. There. This is December. This is the bloodbath in October. And that's fucking December. 42,000 is the target. That's August 6th. August 1st. February 3rd, no. Yeah, right there. That's the jump point right there. And that one comes up right there, and you're right back down right there. That's DIA, something like this. Well, it looks wonky, but I'm using dates here. Right there. And that's where that fucker falls. That's going to be a fucking doozy right there. Blam, bam. And what gets hella sketchy is into next year, if there's no recovery into next year, if it winds up being next, that they decide we're going to go really far down, it's going to become a doozy. 2025, they're going to set it up. They're going to set up in 2025, right? They're going to set up a crash. It's not guaranteed that it happens, but they're going to fucking set up a market crash. That's a pretty big move right there, right? That's 42,000 to 37,000. But there's August 1st right there. The scary part is when we get into that January, February, March, fuck. Like all this over here in March, I can't promise that recovery. How about wait and see? A lot of it's gonna matter between it's gonna matter in January to March of this year. We are gonna find out if we should enter a bubble soon, like the next month. We should be entering a bubble officially. I showed you guys the PE ratio, right? If we continue higher, we should enter a bubble. And if we enter a bubble, we're not in a bubble right now. You might think we are, but I can show you that we're not. But we should enter a bubble if we continue higher. We should enter a bubble. Now, it does matter. It does matter how long that bubble lasts. It's either gonna, or I should say, we're gonna enter the bubble now. Theoretically, we're set up to enter a bubble now. When we enter that bubble, when we come into the first of the year, it's a matter of how long that goes on for. There's going to be a lot of things there's a lot of unknowns that you can't predict. You can't predict the election. We can't. Nobody's got that fucking crystal ball. Not even a bank. So we don't have that information. Nobody really does know the answer to that. That's truth. You can't, if you're going to go out there and call an election right now, you can't. It's too fucked up right now. If you have an uninformed voter, they're likely going to vote for Trump for taxes. No one's going to tell you that both presidents are going to suck when it comes to taxes. If Trump wins, we're likely going to go down. There's nothing you can do about it. So those are unknowns. We have other unknowns, though, too. We have unknowns with the housing market. We have unknowns with do they want to do the 1995 to 2000 thing where we go straight to the fucking moon, right? I don't think that's off the table either. My original thought was 6,000 was top. But now I'm thinking the way the Fed talks, I mean, if they let this fucker run hot into 2026, so that housing bubble technically isn't supposed to end until mid-26. Mid-26. If you were to look at just pure numbers, mid-2026. But the risk begins in beginning of 2025. So I expect volatility, even if it's upside volatility. That would mean like we'd have stupid upside moves and stupid pullbacks. Like you'd be looking for like 20% pullbacks, 30% pullbacks, 20% pullback for a 30 or 40% move higher, 30% pullback for a 40 to 60% move higher. That violent. I don't know if that happens. You guys asked me earlier what I thought about going long, didn't I? You guys asked me earlier what I thought about going long. What did I say? Tell me in the chat, what did I say? What did I say to you in the chat? Who said that? Good night, BBB. That's not what I said. Say my name. Oh, God. You asked me for you said, what would I do? And I said, do not take the long. Been talking about it for weeks. Crazy. I said, I'd rather miss the rip. What's going on over here with Spoos? Snap out of it, Spoos. Snap out of it. It's oh, God, Spoos, what are you doing? Okay, so we could extend this market. I don't know if we will. We don't know if any of these guys are going to fucking be alive. I mean, let's be honest about it. We got some batshit crazy shit. We got 80 fucking 5-year-olds running for president. We got a fucking guy that's going to be 87 fucking years old as president. No offense. I'm a Democrat. That's just a fucking absurd. I'm sorry. I read something last night that really fucking bit my ass. There was like a guy on Twitter that was like, oh, I see. You're not going to vote for Biden because you're not going to vote for Biden because you're mad, but then you're going to let tyranny take over. And I was like, that's not how this shit started. This shit started when Bernie fucking Sanders ran for fucking president and the fucking DNC brought in fucking Mike Bloomberg from New York City to fucking sweep kick his legs out. And then he fucking dropped out the moment that Bernie lost the votes. The fucking Democratic fucking, the DNC election, they're like the mafia. The fucking DNC is like the mafia. They own everything from up and down. You cannot come into the DNC as an outsider and expect to win anything unless you are underneath the full control of the DNC. That's right, politician hour. The RNC, you can be an outsider and win a nomination. The DNC, it's not true. It's false. And I'm fucking pissed as a Democrat. So don't be telling me that I got to fucking vote for Biden. Fuck you, DNC. Seriously, I'm fucking had it with this shit. They're like, well, you got to now, buddy. But I'm like, no, I don't. No, I can just not vote. I just vote for Bernie. It's the worst. I'm a Democrat. It's the fucking worst. If you watch a primary for the Democratic nomination, it is a fucking farce. It is built for their candidate. The DNC's, not yours, as a Democrat. It's the DNC's candidate, I'm telling you. And it's so fucking enraging. It really is. And then they're like, well, if you don't vote for our candidates, you're voting against democracy. And I'm like, you fucking lying sexist shit. That's some shit my dad would do to me when I was a kid. You know, it's like here's your shit sandwich. It's so fucked up. And then you got the Bernie bros out there, and they're the loudest fucking people in the room, right? And then they don't go vote. They don't even fucking vote. What the fuck is wrong with you? You're out there protesting all day long. Did you vote? No. I whined on Reddit. The fuck is wrong with you? I had the summer off from college, so I camped. Did you vote, though? No. My vote's not worth anything. I'm like, ah! You know, you don't have to like Bernie. You don't have to like him. It's not about who the candidates are. There were other candidates that are running, too. It's not Bernie. You could insert any name you want. I'm talking about the process within the DNC is fucking corrupt. And it is. It's fucking corrupt. You can look it up. You can just Google search it. It's one of the tightest, of the two-party system that we have. What do we need? Rank-based voting, don't we? Ranked choice-based voting. This is bullshit, man. I'm pissed. You can insert any name you want. It doesn't matter. Literally, they literally set that. It was like crowning the king in Biden. And then they made his vice president the fucking last place candidate. A fucking Republican. You got a fucking Republican as the VP. She's a Republican. You know that, right? You know she's a Republican, right? That's what she is. And she's going to be my president? Get the fuck out of here. She's really not. Putting people in prison for smoking pot in California? That's good enough for me. Hell yeah, she did. She came in last place in the Democratic Party nomination. That's a fact. And I like women. I want a woman president. I just don't. The DNC doesn't care. DNC is like, this is who's going to do what we tell them to do. Trust me, that's what it is. They groom you. No, I read a lot. I read a lot. Oh yeah, right, sure. I like women. You wouldn't elect a real woman Democrat if you pretended to. She's a Republican. That's what she is. You can suck off the DNC all you want out there. I am that Democrat. I'm an old school Democrat. I'm as liberal as they come. I'm like bleeding heart liberal. Bleeding. Matter of fact, if you think I'm lying, you should move here and live with me if you're so democratic. You come live with me. Come move in my street. I got houses. I'll sell you one. Come live with me. I bet you wouldn't fucking last 1 week with me living where I live. Be too scared. Democrat in name only. That's a fucking fact. I'll pay for your flight here to come see me. I'm serious. I'll pay for you to come hang out with me where I live and what I do. I live that shit. I invest in my community. My community's a bit of shithole. I take care of my neighborhood. I pick up the trash. I put my kids hang out with poor kids. It's the not in my backyard liberal. I want this and I want that, but I don't want it in my neighborhood. Yeah, no, I don't want, I'm with you on that. I'm just mad about it in my own party. I can be mad at my own party. I have to shut my lips. I'm going to tell you who shuts their lips. I'll tell you something else here real close, too. Very important. Do you know who else shut their lips? You know who else shut their lips and ran the party line? Fucking Republicans. When Trump took over, the fucking party shut their lips. I'm not doing that shit for my party. I can be mad at my party. I can be mad with my party and say my party's doing it wrong. They do that in the Republican Party, too. And then Trump took over. It's okay for you as a Democrat to say it's not okay. It's okay. It's okay for you to be divided in your own party. You can like Trump. That wasn't always the case, though. The party is divided, right? Or it's not divided, but it was, right? And you were told as a Republican, step in line, get in line, right? Get in line. You know, like your Mitt Romney's out there. You John McCain's. And they said, get in line. And then Democrats were like, why are they doing that? Look at, they're getting in line. We're almost at that 2:30 mark here. Ooh, they're burning that. They're burning that chain. You see that? $5.48's are only 13 cents for the end of the day. 13 cents. Yeah, I'm not no lockstepping Democrat. I can't be. I wouldn't lock step if I was a Republican either. Do we have universal health care? No. Do we have prison reform? No. Do you have free college? No. We don't have any of those things, do we? We lost access to abortion rights, didn't we? I'm fucking angry about that stuff. That shit rides my ass. Did I get that wrong? Oh shit. Hold on, I got to update something. Hold on a second here. Hold on a minute here. I don't think anything's free. We pay for healthcare now. I don't think anything's free. I don't think I pay taxes. Do I have something fucked up going on here? You can't go to Texas. If you're a woman in Texas right now, and if you're a woman in Texas and you get pregnant, you have an unviable pregnancy and your life is put at risk, you will die. Is that right? Am I wrong on that? Might I get something wrong there? Let me know if I got that wrong. I got a wife and 2 daughters. There are women out there. I don't have to protect just myself. I want to protect all humans and all Americans to their rights, right? Right, protect their body. Stuff like that. Fuck yeah, I'll protect that. I'll vote to protect that too. No, you guys, so we already pay for healthcare. You guys know that, right? I pay for healthcare, you pay for healthcare. There's a swamp of insurance companies, right? A swamp. You get your fucking firefighter comes to your house and saves your foundation. You get your fucking you get your social water sources with your water company, your sewer company. There's some basic things, you know. We already pay too much for it. We already basically have, like, if you go to a hospital, you'll be given care, right? You already have some form of socialized medicine in this country. Firing up the fucking chat, getting everybody all fired up, slamming their computers, bam. Fucking stoking the fire. I think he's like, ah, shit, I'm out of here. I'll take that too. I'll take a Republican that's under fucking 70. 85, 87-year-old presidents running around. What the fuck is that? If they're 20 years old, I'm like, how old were they at 20? When were they 20 years old? Like, how long ago was that? 60 fucking years ago? 19 what? We didn't even hit Vietnam, right? The Great Depression? The age thing's got me. It really does. Civil War? Jesus Christ. Have a commie. I believe in capitalism. I love capitalism. Love it. But I look at it like the fire department, you know? It's like, it's the fire department. I want my kids, I want our children, I want Americans to be educated. I don't want them to be in fucking crippling debt. I want even poor people to have, I don't want them to be unhealthy. I want them to be fit to work, produce for our country. I gotta wait, Chase. I don't know when they start this shit. They start it now or right at 2:30. I'm watching the chain right now, brother. They're burning calls right now. Right now, I'm looking at 548s. They're still shanking them. I might move up to like 547 or something. I'm moving up to 547 now. I haven't bought anything, though. I just got to do 100 fucking clicks to get there. Hold on. Now I'm on 547s. And if they keep bleeding it to 330, then I'll be looking for it. Got another 9 minutes to the half hour. There's another point of interest too in here. And another little one right there. I know, Social Security. I know. It's like the farmers, right? It's like the farmers. You know, I don't like that goddamn welfare. They're fucking all taking welfare. I'm Republican, but I take welfare. Fucking crazy. Our whole fucking system is fucked up. Oh, yeah, bring on the blood, baby. Bring on the blood. I'm going to go to the Discord right now and I'm going to watch Discord. So we have a channel inside the Discord, okay? And it's for, we have the Unusual Whales channel, and then we have the bot for Unusual Whales, or even Trade Ticks will show it. And you want to see like a ramp of call buying down here, right where we are. You want to be looking for, I'm going to look for it right now. I'm going to see if there's any like monster call buying, 0-date call buying in particular. I don't see any call buying right now. I don't see any yet. Zero date only. Let's see let's see if we can see anything coming in here. Holy shit. Somebody's buying calls. All right. Now this doesn't look at this is not financial advice. I'm being very fucking serious here, but someone's cranking out calls right now. Do you see it? You guys see this happening right now? Someone's cranking on call buying. You see the green line right there? Oh, just zero dates. They're doing it right now. They're already doing it. Now I don't know if this works. Please do not take this trade unless you're willing to lose money here, okay? Listen to me closely here. Don't be like, Captain, it went against me. I lost all my money, that kind of shit. Captain told me to do this. Do not. If you're not wealthy and you want to spend $13, spend $13. Don't be like, Captain told me this and I lost all my money, or I'm betting my life savings on this, or my whole paycheck, or any of that stuff. We're coming into about that moment. It's 3:27, 3 minutes left. We'll see if it happens into the bell here. Please. Please use stops. Not financial advice. Don't do this. Do not trade this. Seriously. Just because 2 or 3 go the right way doesn't mean the fourth one's going to go the right way. We're going to lose one of these trades, so if the trade does work, they dump on the open. You close by 4:15. In the past, that's the rule, okay? You don't hold till tomorrow. 0 dates. That's it. Because what they're doing is they're taking the DivX away. They convert the fucking calls that are closing today to shares. I might lose power here, by the way. I want you to know that we've had some really nasty weather here. We've had trees down, crazy shit. We have like a ton of people without power, and outside right now I can hear booms. So just heads up, if I lose you on the stream, I apologize. I can't get my Jenny up and running that fast to come back on stream between now and 4 p.m. if I lose you. One other thing is that I have something I got to do in the morning, so I won't be on stream in the first part of tomorrow morning. The idea behind this trade is when the zero dates are taken, not market tied as gamma tied to call buying. This is intended to force a dealer to chase. So that if they overload the tape with calls, dealers are immediately forced to chase the trade. No, what they're trying to do, whether they're successful or not, I don't know. But what it looks like they're attempting to do is, if I was a hedge fund, right, and I slammed the tape with 300,000 zero-day calls, the dealers are forced at that point to chase price and amplify a move to the upside into the close. It's limited. It doesn't last forever. It's like a directional quick move up to delta hedge the trade. And they can't delta hedge it, so they got to chase it until people stop buying them. I just reposted that post from our friend Gavin. There's a ton of calls coming in for GME right now. Call premium cranking right now. I hope the fuck I don't lose the stream here. We tomorrow and the bell, right? We should sell hard. The bell tomorrow should sell. Theoretically, it should sell. We should ramp the close, sell the open. No guarantees. Don't be yelling at me and be like, "Oh, Captain was wrong." I'm fucking wrong all the time. We don't record programs here. I don't like craft a 45-minute pre-recorded show where, everything is perfect and I give you every outcome and I can't be wrong. This is a live show 5 days a week where I'm going to be wrong. Nothing like, you know what I mean? There isn't like, it's real life, not fake bullshit. You guys consume that other places. Trading 547.35 right now. 547.38 right now. About 47.47 right now. Raise your stops, please. Raise your stops. Fuck you, Nuck and Futz. Raise your stops as you go along. If you closed your puts, congratulations. Or at least for right now at the moment. Hey, Trader Podcast, what up, dog? What up, brother? Selling gold coins. Hold on, I got to do a quick skit on that right now. Think of a quick skit. My bullion. If you're a bull, you'll buy my bullion. Like late night, 3 a.m. Yeah, dude, been out and about. Going to the water, the lake, all that stuff. Going sailing, going river rafting. Let's go. Let's go. We'll call it bullion. I bet Trader Podcast will come up with something. Do you have the bulls to buy my bullion? Now this has to hold right here, okay? This better hold. If this doesn't hold, they're going to sell us down to the depths of hell here. Watch this, not just this candle, but the next candle is going to matter. Not this candle. The next one's going to matter. Let me run that again and see if they're doing it. They got to ramp calls. If they don't, dude, you guys are awesome. You guys are all in here doing this shit. You guys use that. Fucking love this. I love like the trady ticks and the unusual wheels shit. Shit's badass. We gotta develop one of these fucking things. See if they're still buying or not. Hold on. Come on. God damn it. Come on, bot. Keep thinking. Yeah, they're leveling off right now in call premium. That's not good enough. Can't just, but they can't. They stop buying. That's not going to send us up. They got to crank it. Yeah, we're not getting that. We're not getting it. Yeah, not enough volume. It flattened out. It can't flatten out. It has to be like huge volume. This isn't retail volume. This is like very wealthy, millions and millions and millions of dollars. So you're looking for like size here, not retail size. You're looking for hedge fund size. You ain't calling your broker up and saying, I need fucking this and that and this and that. Yeah, we might get parked here. It's possible. It's possible we get parked here. The tide is flow, or the net flow is slowing down. It's just sideways right now. $341, 19 minutes left. I've got zero dates here. I've still got them on. This trade's paid too much for me not to have it on. Well, they didn't get the low down here. That's good. They didn't get the low. So you got the first initial pump up. No blood down here. Cross is coming right now. You can see the cross is almost there. Come on, baby. Need to get above this candle right here. Otherwise, we're going to get pinned right into the fucking close. That's what I'm looking for, is that new high right there. We're boxed in right now. Maybe that makes it cleaner for you to see. Oh, sell the fucking open tomorrow. In my view, you sell the open tomorrow. I wouldn't be in puts right now, though, personally. Only on the opening bell. We had some delayed bullshit on Tuesday where we went up in the overnight. They didn't do it in cash market. I'd be suspect of that shit again today's close. I'd be selling the open, though. A lot of people were short and in puts on Tuesday. When we were closed, it didn't print, did it? So, it's such a fucking wonky ass week. With the closure on Wednesday, I wouldn't have puts on until the open tomorrow. And I would think my thesis here is that we sell down again tomorrow. One more day of true gamma coming off the market. So we've got gamma coming off tomorrow, right? And then so we've got nice gamma coming off. That's at least a window. It doesn't guarantee we're going to go down tomorrow, but we got a bunch of gamma coming off the market tomorrow. We've got rebalancing, which doesn't make it necessarily bearish. Rebalancing isn't necessarily bearish. I should rephrase that. Not necessarily bearish, but it does lead oftentimes to down moves in the stock market. And we should blood Friday close. Like we should blood right down to 3.59. It should get ugly. The one thing that I'm not positive on right now is how long it lasts. It could last into Tuesday. So Tuesday would be the low at the worst. Tuesday AM and then a back test on Wednesday open. If you're in a call spread on Tuesday close, you'd probably be fine. Even with a back check on Wednesday open, or you just wait for Wednesday open at 9 a.m. Terrible even saying that stuff. I mean, we have an hourly trigger that could stop this from going up today. It's not the same as usual right now. There are some reasons why this might not work today. No high tick. No high tick. We might have got the high tick. We might have got the high tick. It's really fucking close. Zero-day call flow still flatlined. No follow through from 3:30. Zero follow through. As a matter of fact, this whole move right here corresponds with all of that 0-to-8 follow through. And they just flatline buying calls right here. There's like a whole bunch of rich guys out there. There's a whole bunch of rich guys out there that own SPY right now. And they're like, please, 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 please. I want my dividend. I'm up pretty good right now. I'm at 57 cents. I think I bought at 36 cents. So I'm pretty happy right now. I'm still green, by the way, so I'm good. But that's not good enough. I want like 1,000. I'll take 1,000%. Oh, now they're bleeding me down.
Market on close imbalance. The S&P 500, 2 billion to the sell side. The Nasdaq 100, 1
You
billion.
fucking cocksuckers.
The Dow 30, 1 billion to the sell side, and the Magnificent 7.
You see them I just got hammered down just then. You see that shit? My options just had a low of like 35 cents. They're all over the place. Now they're trading 46. 52 cents right now. 56 cents right now. They're all over the fucking place. So if you're watching 547 C's, right? They just went up and down like 100% in that one bar. That one fucking candle right there. Come on, baby, do it for me. Do it for me again. If we do it, I'm going to laugh my fucking balls off. I got to go. Hold on. Sorry about that. We're having a major storm here right now. And the wife is panicking right now. $0.64 right now. No, my bad. We have a major storm happening right now. We have some flooding going on outside. And I'm being asked to take a look at it right now. Yeah, we got a major storm happening right now. Oh, fuck yeah, just do it. Take that shit away from them. Take it all away from them. Snatch it right out of their fucking dirty hands. Wait an entire quarter thinking you're going to get your fucking dividend, and then just steal it from your ass. I went and took a look real quick. We're good. Then we got a storm surge right now coming up and happening. It's pretty bad. Like the house is shaking. Whoa! 75 cents right now. Should I take the money here? Dude, I always get out early.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for...
Oh! Take half. Oh, dude, they're taking money off it right now. Oh, yeah. I might have to get off the stream. I can hear it outside. It's pretty bad. Hold on one second here. Oh, come on. Don't do it. Climb the wall of worry.
So just keep in mind now in 5 minutes time, 4 p.m. Eastern, on the cash equity close today, Richmond Fed President Barkin is due to be speaking on the economic outlook to the Richmond chapter of the Risk Management Association. There is no text expected from Barkin, but there is a Q&A in just under 5 minutes time now.
I took half off. I only get half on. I still have the other half on, though. I'm up 2 pennies right now. I'm up 4 pennies right now. The fucking dude, the chain and that strike is all over the place. 547s are they're literally up 100, down 100, up 100, down 100. Looks like we're going to be long to 415, doesn't it? I'm getting murked right now. Getting eaten alive right now. Well, they were 36 way down there. Two more bars left. Should I just get out? Maybe like just put an order in for 36? They're like, take 25, take 20, take 25, sir. I'm like, fuck you, no. I ain't taking 25. Get fucked. Oh, dude, we're at 22 now. Fuck. Ugh. We're at 13 right now, 14, just eating them alive right now. Still long. Fucking goddamn it. Fuck you. I'm not fucking selling. Get fucked, dude. Send him to zero. Duh! You fucking cunt. All right. They're on still. I left them on. I've got half of them still on right now. I'm going to watch the next 15 minutes. That sucked. I'm a little pissy about this. They sold the fucking hourly trigger down here. Boom.
It says that no major trading partners have manipulated the currency and that Japan has been transparent on Forex operations.
Bullshit. They have not been fucking, Japan has not been, they've intervened without telling anybody. They lie about their intervention. God damn it. 9 cents right now. All right. I still made money, so I'm happy. I caught 76 cents on 50 contracts on a 36-cent buy. I still have 50 contracts on. I'm going to leave these things on into 415. I do want to say something. I did say sell the open tomorrow, but this hourly trigger, dude, they want us below this hourly trigger. So I do have a question about tomorrow, and maybe we do sell today and not into tomorrow. We might not be waiting for 415. So if you wanted to short this shit today, this might be right to do it right now and not wait for the bell. They look pretty pissed off here. They look pretty fucking angry into this close. Now, I do expect a down day tomorrow. I expect it to be down into the close. But right at 359, it should be ugly as fuck. But that rejection before, that rejection, right? That rejection up here, no fucking bueno. This right here is bad news. Bad news. Bad news. They got me at 3 cents right now, these fucks. These motherfuckers got me at 3 fucking pennies. Fuck. Fucking motherfuckers. Lower, bears eat tomorrow. You should eat tomorrow. Bears should eat at least one more day. You might catch it into next Tuesday, though I'm not sure. It depends on how low we go. Price will matter and how much longer it will go to the downside, but I would like to see it go to Tuesday, to be honest with you. Still good for a call. Are you the guy that I said I would talk to on Discord? Oh, you are? Yeah. Tonight I'll give you a call myself. I'll give you a call myself. I've just been tied up. It's been nonstop. Like go. I get pulled in like a million directions right now. Or you know what I can do is, you know what I'll do is I'm gonna have Joe call you. If I can't do it, if I get stuck and can't do it, I'm gonna have Joe give you a shout. One way or another, I'm gonna call Joe and have it happen for you. All right, I'll see you guys tomorrow, 9:30 in the morning. Stream will be up. I want you to know that I expect tomorrow to be a down fucking day, right? So be careful tomorrow. If you're a bull trying to buy that dip tomorrow, you got to be above the hourly trigger. You need a high, and then you need a back test that's successful, right? If you don't get that, you can't be long. Earlier today, we said the same thing. Remember earlier over here today, we came back up here, and we said, hey, we ain't above, are we? And they sent it right back down on us again, right? If these motherfuckers run this up right now, between now and 4:15, 7 cents right now on calls. I guess I'll stay with you guys till 4:15. I can't fucking leave, so. No, it's not normal. It's not normally a gap down. It's like we sell the open. Normally we sell the open, but being below this, I would think that we trade sideways here and then sell the open on tomorrow's open from where we are. You'll get a brief from me tonight. I'll give you an updated brief tonight. We saw off the Dow tomorrow. I expect the Dow to have a pullback, but then go up. I did a DJ, but this is a daily chart. This isn't a 30-minute chart or anything. There's a rotation going on, more broad-based for a rally. There's a rotation in the market right now that's bullish. So Dow Jones Industrial Average, I don't know if I'm as bearish on that as you might be. You got to remember, this isn't bearish behavior. This is rotation. We're two different conversations. What might look bearish on the outside is really not. It's if you have a portfolio, right? Okay, so if you have a portfolio, if you were to manage your own portfolio and you had a great year or a great quarter, what you would do is you would take off your winners, right? That's what's happening right now. You're culling your winners, right? And then you're looking to find something that might be unloved to rebuy into or rebuy something of strength on a low. So if you're like, let's say you're like a NVDA bull, and your thesis is it's going to continue to go higher, you're going to call profit and look for a place to get long again. You're also going to identify tickers that might be done going down after 2-3 quarters, right? And roll some of your risk off into something that's underperformed. And it's this risk ratio for you. You're not always like, hey, we made another 10% today. We made another 10% tomorrow. We made another 10%. Does that make sense? I don't know. I'm simplifying that enough for you? I don't know. It's a big it's a big rebalancing of risk. Trading 11 cents right now. Got another 14 minutes left. I'll take that better than the 3 cents. Yeah, you know what we should do is, what we should do tomorrow is if you guys have companies, how about this? I will come to the market tomorrow with 3 to 5 companies that I'm interested in for Q3. And why don't you guys think about what you think is a rotation into or even out of for Q3, and we'll take a look at that. We'll chart them out together. We'll spend tomorrow charting your tickers for Q3. We could do that tomorrow. That'd be fun. That sound good? Yeah. If you think something's like sell the news, you think something's just getting started, like CCL could be one of those companies, right? It's either going to be going down in a big way for a big move up, or it's being rotated into right now. No. Listen, I got to be honest with you guys. The only things that matter right now is rebalancing. I got to explain that to you. I got to emphasize that right now you have different forces that are at play at different times in the market and different forces that are not in play at different times in the market. So if I'm a bank, right, and I enter the market to make trades, I will run over dealers. I'll run over retail. Does that make sense? So I place a trade as a big bank, and then I get out. I get out and stop. I don't make any trades. I'm not pushing the market around. So right now, right, these banks are doing this. They are in control right now. They don't care about your MOC buy side, sell side. They don't care about your gamma. This is a big fat fucking elephant coming through. So let's say there's like 10 of us in a room, right? And we're playing basketball. And then like a giant walks in, big like 30-foot giant. We all get out of the way, right? And that's kind of like what this is where we are right now. So it's hard at these times. When we get at times like expiration, contracts ending, it's hard to be like, yeah, this is going to happen or that's going to happen. Like real money buying, real money selling, all that kind of stuff, like really does override a lot of stuff that we might normally use for what might happen in the market. Yeah, it's hard to like try to simplify it. Like sometimes you can even game or amplify that stuff. So if you know that a bank is selling, a retailer or a hedge fund can jump on and amplify that. That's how you start getting like market collapses and shit like that. When they're not playing, then you say, well, who's in the pool? Are CTAs in the pool? Are hedge funds in the pool? Are corporates in the pool? Who's in the pool right now? Who's trading? Who's not trading? All that stuff matters. Who's in the pool? Who's swimming? Who's actively trading right now? Why are they doing that? Who are they using to their benefit? And right now it's tough. Like when you get into this end of quarter shit, there are forces greater than you or I or whatever. Gamma does play a big role in this too, right? Large size contracts just fucking all expiring same time. Gamma blowing off all of these contracts. Then you're waiting for them to come back in and place their next trade. $0.12 right now. I'll take the 12. It was at 3. I was at 3. I think it was at 3 cents down here. Maybe 2. Now I'm at 9 cents. Maybe 2 or 3 minutes left. Yeah, all of you. If you have a list, we'll look at them in chat. We'll talk about them in chat. 100%. If you're in the Discord, list them off. Like go to we have channels devoted to that stuff. Just be like, hey, I'm interested in that, or can anybody help me chart this stuff? We're here to help each other. So this isn't like, our community is a lot different than a lot of communities out there. Our community is about helping each other. It's not like, it's not like the it's not like the Coliseum where we're all trying to eat each other. That guy sucks. This guy sucks. That guy's good. That guy's bad. You should be helping each other out there as a retailer. Trading 11 and 13 right now. I'm going to try to get out of this right now. Nope. I left I left puts or calls on once that I owned, and they tried to fuck me after a close once. They tried to assign me to a fucking, they wouldn't give me my money. I had to close them, and I owned them. I didn't sell them. Nope, getting bled out. Fucking motherfuckers. God damn these motherfuckers. Just sitting there right now. I had a meeting last week with Joe Donut and Bork to run the program. We gave a rough outline on how to do the contest, and now we're going to implement it inside of the Discord. We just had a meeting last week. We have another meeting coming up, I think. We're going to pay you guys, where we think we're trying to run a contest so we can pay you guys some of the winnings from it. I'm so mad right now. They're taking my options down to 0. They're burning my calls right now. I wanted that to be a big green bar, like whoop, straight up.
So following the close of the US cash equities markets, just going to give you guys a quick market wrap of the session today.
I think I got 2 cents. Motherfuckers, dude. Fucking, I hate these fucking dealers, dude. I hate them more than I hate them more than the entire world.
Signs of buyer fatigue.
I hate them more than hedge funds.
Briefly took 5,500 before losing traction.
You're like, woo!
Still remaining above a technical threshold.
Getting a bigger pool.
At an overstretched market. The high-flying tech group that has powered the bull run